Okay, everybody, welcome to the training. Can you hear me okay? Put a one in the chat if you can hear me. All right, we got a one. All right, my name is Tony Shepard. I want to introduce you to Jason Allen Jankowski. He is the presenter today, and he's been trading his own accounts and making a living from that for decades. Along the way, he has helped countless traders learn how to be successful trading. He did one on one coaching, speaking engagements, webinars like this one, wrote a few books, I think four or five, and three of them were published by Wiley and Sons. And they were actually bestsellers in trading and Amazon. And he's going to be teaching some powerful tips today on helping you become more successful with this business. So, personally, I want to say first that Jason had a profound effect on my life. I think it was about 10 or 15 years ago. I picked up this material as trading on how to trade, and it was just great. It blew my mind. It cleared up a lot of my confusion about trading. It showed me what was really going on, I will say. It was kind of, a matrix moment for me because at the time, there's so much different information I was struggling to understand and apply. And then I came across this material and it just really resonated with me. It really clicked. So at the time, I didn't even know his name because he went by Trader X. It was anonymously published. So all I had was this audio and this book. I just kept listening to it over and over. And I had questions, but no one to ask. But for me, what I got out of that was just this great perspective, and it really worked for the macro. This idea of time compression, I understood the big tops in the markets and how things like with these big public hypey type moves. And for me, that's what I could trade these like the big tops in the markets with this information. But I didn't know how to use it on day to day, and I had no one to ask. So that material, kept in the back of my mind for years, and it helped me think differently. Right, it went beyond trading. It helped me think differently than the crowd. It gave me independent way of analyzing and understand what was going on, and something he called clarity of observation, which was critical. Like, right, be a objective observer and not try and let your ego or what your opinions are get in your way. So now, because of that, I could see through what I call the BS, like what the news claimed the reasons for trading, moves in the markets were, all this stuff. It just became so much easier to understand and clarify for me from that. And the hype, we go through these hype periods from year to year. I think, maybe the latest one might have been crypto. If you were caught on that bandwagon, it would help you understand what's really happening and how to position yourself correctly and not get caught in that trap of being, you know, long when crypto crashed. So, fast forward about 10 or 15 years, and I read this book called Time Compression. I'm like, oh, this is Jason. So now I knew because of that concept was also in the other thing, what was going on. And so I reached out and I was able to ask him some questions to help get that clarity I'd always wanted. And he was really nice and talked to me about this stuff. And some of my questions, he would he was like, well, if you want to know the easiest way to make money, just do this. I was like, really? Or, if there's only this, this or this that's going to happen. It's really simple. And the more he talked to me, the more I realized, like, man, this is great stuff. It was so much easier than I thought. And I was talking to him, and I brought up the conversation. And how I fit into all this was, I was like, I think a lot of people would really want to know this because the books get into like deep conceptual type stuff in some of those. And here was just like a simple, just do this and you can make money. I was like, wow, I think a lot of people would like to learn how to do that. And so we kind of turned into this course. I've been working with him. My skill set's more like with websites and stuff like that. And I worked with him, and over the last few months, we kind of built what you have here today. So I think Jason's had a profound effect on my life for all those years, and I'm really happy to be able to let you guys see what I've seen, and it's helped me tremendously in a lot of ways. So I think one thing he said is that trading is a kind of experience. You can't help but evolve as a person. So, I think that's absolutely true. It's changed a lot of things in my life, not just trading. So, without further ado, I just want to pass this over to Jason and introduce him, and hope you guys are ready for a few piece of great information that, I know we're going to talk about the doubt destroyer. It's going to be something to help you if you need more confidence, if you have doubts, if what do you do to fix that? Another thing is going to be gain multiplier. That's a big one. Is a simple thing you can do. Just adds a lot of profit potential to your trading. And then overall, the big message behind all of this is this warning. Like, if you're not focused on the right thing and you're not fixing those things, you're gonna have potentially big problems being profitable. So if you've been struggling, if you're new, these things are really gonna help you get on the right track faster to bigger gains, I think, and in my opinion. So here, Jason, want to take it away there?
Yeah, I'm here. Thank you, Tony. I'll get that endorsement check out to you right away today. That was a very nice introduction. Thank you. Appreciate it. For all those listening, maybe for the first time, thank you for coming on a Saturday morning. I know that a lot of times we have other things planned and other things that we want to get done with friends and family on a weekend. So for you to take a little bit of time and invest it in learning more about your real potential you have in the trading environment and to maybe consider working with me, I really appreciate you doing that. So thank you. Now, I want to go ahead and give you a brief overview on what it is that we're going to talk about today. And I think it's important too that because I never know who's listening, I think it's important that we make sure that everybody know the trading really is not for everybody at all points in time. It's a risk investment. People can and do lose money. You need to really carefully consider whether trading in these markets, forex, futures, and options, is really right for you in light of your tolerance for risk, your financial position. Um, Everything that we're going to talk about in here is really considered opinion. So it's subject to change at any time. But I want to make sure that if you are the kind of individual that really believes that this is the right thing for him and is excited about learning how to overcome these risks to find the real opportunity, then I promise you're going to get the best help that I can offer you. So that being said, let's get right to work. I'm just going to give you some brief intro about me personally. I was not always a net winning trader. I started in this business in 1986 as a customer, just like most everybody listening. I opened a small trading account with a small broker in Chicago. I'm from Chicago, Illinois, the headquarters of World Trading. I didn't know that at the time, but I did my very first trade in Chicago Board of Trade, big board corn, and I was hooked. I knew this is what I wanted to do. And after I started as a customer and lost my first stake in the markets, I became a broker and then began a period of losing money consistently and constantly. I had to discover something about the markets. I didn't know what it was that I needed to know, but I was losing money consistently. And I talk about this in my second book that you can buy on Amazon if you're interested. It's The Art of the Trade. It's my story from becoming a losing trader to a net winning trader and what the difference was. And what I learned was there is no secret. If you're one of those people that is looking for some answer or something, there's something outside of me. If I just learned enough about X, or if I could figure out what oscillators are doing, or if I could learn enough about the fundamentals, or if you're thinking along those lines, you're never going to make a dime. And I'll just save you the trouble right now. This isn't for you. But if you're serious about learning what it takes to win, and I'm going to show you exactly what you need to win, then all of those other issues go away. They don't matter. You know what I mean? And I personally don't believe that there is anything complicated to trading. I don't think it's a complicated thing to do. Very simple thing. But it's like playing chess. I could teach you how to play chess. Each move that each piece makes on the board, I can teach you that in 10, 15 minutes. You think you're going to beat Bobby Fischer the first time you play chess? I don't think so. Chess is an easy, simple thing, but it's a complicated game to master. And that is a great definition of this business, right? Because right now, you have a huge number of misconceptions in your head. You don't even know you have them, but they're there, and that's creating your losses. And what I'm going to do is I'm going to show you how to get over that stuff, what it is you really need to focus on. I'm going to give you some very powerful tools to create a winning environment. And once you begin to apply those tools, your results will improve significantly in a very short period of time. I've had traders that I've worked with directly that went from losing trader to winning trader overnight. Now, I'm not saying you're going to have a similar experience. What I'm saying is it's that simple. Whatever it's going to take for you to flip the switch from lose to win is not something that you probably think it is. And that's why you can't find it. What it is so simple, and your results will improve very quickly that you'll be amazed that you hadn't found it sooner. And you need to find it sooner, because let me tell you what you're up against. And if you don't believe this, what I'm going to share with you right now, okay, this is not for you. The odds are stacked against you. The probability of you winning at futures, forex, or options consistently over time is really remote. In fact, over 80% of people lose. I think the number is closer to 85% or more, but that's a different issue. And if you don't think that's true, let me tell you something. Here's the price I paid to figure this out. I went through a period of losses and debits that went on for years. Years. Bankruptcy, loss of credit, couldn't get a bank account, one step from homelessness for years at a time, every freaking month. You were throwing your ass out of this apartment. And I come up with the money by the end, but within that 15 days before we got to go to court. Then I had to do it every month, over and over and over again. Owed back taxes constantly. Never had a social life. I had no money, so no vacations. Living in the most ridiculous, disgusting slum place. Just one time, a heroin addict died in the lobby of my building that I lived in. It wasn't hell, but you could see it from there. All the time, I'm getting up every morning, putting on a pair of beat up leather shoes with holes in the bottom to go to the markets and figure out how to make money doing this. And every time I had, when I had an income, went into learning more and more about the markets in the most ridiculously futile attempt to learn how to turn all of this around. And let me say this, I was completely unprepared for the challenges I would face once I decided to become a trader. I had no clue at all that I would suffer like this. Because, you know, if you met me personally and got to know me, you would think that that wouldn't be a problem. I'd succeeded at everything I'd ever done. I had an Air Force Academy appointment. I was a pilot when I was 17. I drove race cars in France. Anything I touched, I made money at. And then I got into the markets and got my head kicked in for years to the point where it was like embarrassing. What am I missing? What is the big deal here? Right? Then one day, bam, I experienced what people call an epiphany. And I almost didn't sleep for 3 days. I was so excited and astonished at what I discovered about the business of trading. I had no idea what trading really involved because, like most people listening, I had bought into the same BS about study and analysis and education and systems. And what I discovered to all of that is that the winning traders what I discovered is what they already know. There's no secret. There's nothing you have to study. It changed my thinking process so dramatically that I literally became a different person. People that knew me then and meet me now can't believe it's the same guy. I've heard people tell me that more than once. You know, I became a net winning trader. I got all of the benefits that come with that. And I discovered something about the markets that made all the pain and suffering worth it. So if you're going through even a little bit of that, there's light at the end of the tunnel. and it's not an uncommon trade. Okay. There's a way out of this mess, and I'm going to show you the key points that every winning trader knows. And how do I know this is true? Because I did the same thing you're doing right now. I quit counting at around 60 grand, but I probably spent six figures or more on books, tapes, audio series, video series, personal training, anything and everything you can think of, charts, graphs. I met with some of the most significant people in this industry because they all lived and worked in Chicago. I went to the Board of Trade and knocked on the door of George Lane, the guy who invented stochastics. Because when I got started in all this, there was no internet. There was no email, no internet, no free. What you get for free on the internet every day, I paid tens of thousands of dollars to learn. And you know what? It's not helping you either, is it? Because it won't. And it can't. And it's not supposed to. It's supposed to keep you confused and buying that crap until your money's gone. That's what it's all about. I discovered what was required to become a net winning trader. And once that change was made permanent, I never looked back. I can't remember the last time I had a losing year. I'll have losing days and weeks like everyone. I'll have losing months. I'll occasionally, once every couple of years, have a losing quarter. But I haven't had a losing year, and I never will, because I know what it means to be a winner, and I know what's required to win. I know we're going to talk about this. I know what my probabilities are. I know how to enforce them. And so it doesn't matter if I have a string of losers and a drawdown. There's nothing wrong with me. There's nothing wrong with the market. There's nothing I got to learn. There's nothing I need to change. I just need to stay disciplined and consistent. And that's where most people lose, because they don't know how to do that. I learned the difference between net winning traders and net losing traders. And I'm going to show you that difference right now. I'm going to show you something first, because this is interesting. I'm going to introduce you to a few people. But first, I want you to take a look at this photo on the screen there. Does anybody know what this is? If anybody can tell me what this is, my hat's off to you, because I didn't know what it was. Anybody? No? Okay. One guy wrote in here, China. No, you would think that because of the quality of the artwork. But no, this is a painting from Osaka, Japan. This is the rice markets around the time of our first trader we want to discuss. Anybody heard of this guy? Tell me if you've heard of this guy. Ever hear of this person? Monisha Hama. Anybody heard of this? One guy has. Same dude, actually. He says, great trader. Yeah. That's like saying Jesus Christ was really good at talking to people. Yeah, he was a great trader. What this trader is going to share, what I'm going to share with you about him, is not new. It's just forgotten, right? And what this trader and another guy I'm going to share with you is new or forgotten. I don't even think it's forgotten so much. It's worse. It's ignored by almost everyone. Homa intended that traders come to an understanding about people. They understand the business of successful trading is about understanding what people will do under certain circumstances, right? Homa traded the rice market in the 1700s, when there was no internet, no TV, no telephones, no beepers, no artificial intelligence and neural net software, no high-frequency trading. The guy amassed a fortune that in today's money would be worth around $10 billion. There were people that wouldn't walk the street in his hometown without his permission, because they were afraid he had godlike powers, that he could take people's souls because he was so good at everything else he did. He wrote the first book on trading psychology, which was called The Fountain of Gold. It's still in print. You can't have my copy. And he's considered the inventor of Japanese candlestick charting, right? But that wasn't his intention. It was never his intention for people to use those charts to trade with. His intention with all of that was to isolate points in the market where people's psychology would make a change in the underlying price action. He said things like this: if everybody wants to sell the market, a move higher is due. Have you heard that before? what he wanted from what you and I called candlesticks is that you and I would use it more like, the Asians use the I Ching, which is a method of forecasting probabilities, right? Here's what Homa said. You must be willing to go against the crowd. Anybody heard that before? How come you don't do it? You must be willing to think differently. Heard that before? How come you don't do it? You must not listen to common knowledge or the crowd. It's the thinking behind the tool, not the tool itself, that is the key to profit. Homa would say something like this. If the only tool you have is a hammer, you will tend to see the markets as a nail. What is the thinking behind the hammer? Is that the same thinking that goes into a screwdriver? Is that the same thinking that goes into what? A shovel. Now, what's the thinking behind the tool? Not the tool. What's the thinking behind the tool that makes the tool a tool? What is the thinking behind candlesticks that makes candlesticks a candlestick chart? If you don't know how that works, keep buying Steve Niesman stuff, because boy, you're going to lose your money quick, aren't you? So what's happened since the 1700s? Okay, well, I'll tell you what's happened. There's been this major focus on technical analysis and math. Why? Because that's science. And science is assumed to be the best choice for getting answers. It's science. It's fact. A plus B does equal C. And we can use all of this stuff to figure out what the markets are going to do. And how's that working for you? Creation of countless indicators, oscillators, prognosticators, artificial intelligence, machine learning, charting methods. Mars is retrograde with Venus this week. That means the price of gold is going to rally. How do I know that? Because I've studied everything there is to know about astronomics and the relationship between the moon and the price of bonds. I mean, does any of this sound familiar? Do you understand what's happening here? Well-meaning people, or people that have figured out how to take your money by telling you what you want to hear, marketing people, they're selling what they believe will answer the question of where to buy or sell for a profit. And they tell you, and it sounds wonderful. Here's what you got to do to win. Wow, that sounds phenomenal. I better buy that. So if you've been struggling up to this point, you're not making the money that you could make from your trading. It's not happening for you. If that's the case, guess what? It's not your fault. You've been led down the road like everybody else has. The biggest loss of focus and knowledge experienced, since trading was even invented, that's what's happening right now. People took what was developed, an understanding of how people behave, and turned it into a set of formulas and a set of mathematical principles. See, people believe things about the trading world that are simply not true. And they don't even know there's something different they could be doing. You have what's known as a limiting belief, what psychologists call a limiting belief. It's causing you to stop and not go as far as you can because you don't know any better. And there's a term out there in social development, psychological development, people development called "you don't know what you don't know." If you're deluded about something, you don't know you're deluded about it. We call those people here in the United States Democrats, but that's a different issue. What I want to do right now is talk to you about the greatest trader that's ever lived, in my opinion, and this is Jesse Livermore. His life story was written as a kind of a novel, and it was called Reminiscences of a Stock Operator. It was published in 1923. It was written by a real author named Edwin Lefevre. And Livermore, in my opinion, the greatest trader that ever lived, said everything you needed to know in that book. If you read this book, Reminiscence of a Stock Operator, and apply what Livermore applied, learn what he learned, understand what he understood, there's no reason why you can't become a net winning trader, in my view, because it's all in there. But it's not all in there from the standpoint of how do you get it out? You know what I mean? So here's one quote from Livermore that gives you a clue what's really happening. There's no bull or bear side to the market. There's only the right side. Prices move along the line of least resistance. And one of the things we talk about in the netwinningtrader.com formula and protocols is the understanding that your money comes from the losing trader. The line of least resistance is the loser. Who's the loser? Livermore was also quoted as saying on more than one occasion, chartists, he considered they were freaks or some sort of a pet monkey employed by brokerage houses, only because he never met anyone making money who used them. Charts. Only the opposite. Chartists were all losing all the time. And they had a reason for that too, but that wasn't their fault. Livermore, like Homa, understood that trading is about people, not patterns. And what happened? Market mystification. People, they just simply forgot, or I think more likely ignored, the simplicity and common sense of the wisdom provided by these two great traders among many others. And I fell into this trap too. I thought there was some secret to this, some mystical thing. I simply could not accept that trading was so simple that when I finally came to understand this, I got really angry because I spent so much time, effort, money, and commitment into believing something that was all wrong. It was a lie. It was an illusion. It was never going to work for me, ever. And it will never work for you, ever. That's the problem. Market mystification. People who educate traders have completely lost sight of what professional winning traders know and what they do. Traders today have fallen for just a complete misconception of how and what is required to win. Endless study, charting, analysis, calculations, projections, all based on some mathematical computation that leads to loss. That's where it goes. You're not making any money now using all this stuff, are you? Of course you're not. Not a single winning trader puts their confidence in any of this stuff. And if you're honest with yourself, you already know you have the same problem. Maybe you aren't ready to admit to yourself yet that you need a fresh look at things, but you will be once you lose enough. Because of these things, the typical trader has little to no potential to create gains. Roughly 80%, and I believe it's closer to 85%, or more of traders will close at a net loss. You're not going to beat these odds doing the same thing everybody else does. So what we got to do is demystify the markets for you. I'm going to help set you on the right track, really help you come to an understanding. And this is it. This is everything right now. Before I actually experienced my epiphany and understanding, it was about a year ahead of that time, I had a potentially life-changing experience. Some of you are going to say that a year from now after listening to this broadcast. Had a potentially life-changing experience, but I didn't make the connection at the time. I met a wheat pit trader. There's no more pits anymore. Sorry to say. That was a unique experience to be a pit trader, I have to tell you. But to work in the pits, this guy was a wheat pit trader. He told me that the secret to trading, he told me what it really was. He sat me down and looked in the eye like he was making a joke. He said, I'm going to tell you the secret. Right? You know what he told me? When everyone is buying, look for a place to sell. When everyone is selling, look for a place to buy. That's the secret. That's it. Because when everyone is selling, the market doesn't have any sellers left. It's going to change course and rally. So who's the losing seller that's going to pay you a profit if you buy from his selling? Same is true for a down move. Who's the losing buyer that's going to pay you if you short against them? Because that's where the money is. The simple solution. All you have to do is find the market's weak spot and put your position on. To find the weak spot, you just have to know what to look for. When I was younger, I studied martial arts. Specifically, I studied karate. Everybody calls it karate. Although I was a big fan of Bruce Lee, there were no kung fu studios or kung fu dojos in Bolingbrook, Illinois in the 70s, where I grew up. Um, the one thing for me that was such a big draw was when my sensei demonstrated his skill at karate by breaking a few wooden boards. Now, if anybody's ever seen this, it looks pretty spectacular. Guy holds a board up and he kind of turns his eye away because of this phenomenal fury that's going to be unleashed. And boom, breaks the board. Everybody goes, wow, that's amazing. Right? And he promised he would teach me how to do that when the time was right. Well, after more than a year of training and discipline and several times a week going to the dojo, he felt I was ready. I was so excited. And then my excitement turned to extreme disappointment because what he showed me was so simple, required no special skills or anything. Anyone could do it. I could teach you how to break boards right now in about 2 minutes. Save you all the time in the workouts and the bad clothing. There's a weak spot in the board. That's all. That's all it is. It's like it's a show. There's no real strength involved. There's no skill involved. The markets are the same way. There's a weak spot in the market. Find it, and it'll pay you. Next, you have to know how to manage that trade so you can be profitable regularly. So I'm going to show you how the simple steps are that we teach at Net Winning Trader for managing trades to make a lot of money. So I'm going to show it to you right now. Now, remember, you have to think different and do different things if you want to have a different result. One of the things that most people don't like to hear, but it is true, is that the definition of insanity is doing the same thing the same way all the time and expecting a different result. That's not going to happen. You got to think differently, do things differently if you want to have different results. So we're going to start at the foundation of how winners win and show you what you need to know to create that process for yourself. Okay? So let's start with the basics. Losses create pain. The market is a pain amplifier. The loser is in pain. The average typical, guy is losing, and this is painful. So to avoid that pain, that really becomes the goal of the losing trader. Therefore, the trader will use everything and anything he can possibly think of or find to lessen the pain he feels from losing. So that's why losing traders spend all their time studying and analyzing and waiting for confirmation and blah, 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 blah. Because all of that is supposed to reduce the pain they feel when they put that trade on and it starts losing. They got to find a way to stop losing because it's so painful. And this pain avoidance process is the same for every losing trader. Therefore, they all do the same thing almost all the time, creating a weak spot in the market regularly that you can exploit. So by focusing on those weak spots, we create opportunity out of someone else's losses. The profit paradox. The wrong focus here. Losing traders attempt to reduce their pain by increasing the number of winning trades. They think that the more winning trades they put on, the less pain they're going to feel, the more money they're going to make. And their goal is to get to 55, 65, 70%. They want to get as many. They love to listen to these brain dead people that you hear talking about 75%, 80% winning trades. And I can show you how to do that. We'll make all kinds of money getting in and out for 4 or 5 pips at a time. Right? This is not likely under most circumstances in the markets, and the probability of maintaining these high win percentages is also unlikely. In fact, even if you can do it, it doesn't matter. The desire to maximize the number of winning trades or minimize the number of losing trades works against the trader. The success rate of trades is the least important performance statistic and may even be inversely related to performance. That's absolutely true. That's a quote from William Eckert. Now, William Eckert, if you don't know who he is, you might remember the name Richard Dennis. Richard Dennis was a pit trader in the 60s who took about a $10,000 grub stake, it was called, and turned it into a $400 million fortune. And Dennis hired a bunch of guys that he called the turtles. William Eckert is a turtle. He's one of the traders, 27 people that he picked by hand and taught to trade. Richard Dennis said I could take my trading method, everything I do, I could print it on the front page of the Chicago Sun-Times, and people would lose money trying to use it. William Eckhart was taught how to use Dennis's method to make money, and now I'm going to show you something astounding. I'm gonna. This is going to astound you. This whole issue of making a lot of winning trades. This is the percent winners of real trades done at a clearing firm, an international clearing firm. You may have heard of it, FXCM, with literally millions of accounts. And this graph represents almost 13 million real, live, cleared round turns in the market distributed across all these different currency pairs. Euro, USD, pound, yen, right? The green bar is the total number of winning trades put on in those pairs by all of their customers, right? Millions and millions of trades. And across the board, lots of more winning trades than losing trades. In one case, 70% in this pair, Aussie, New Zealand, right? 70% winning trades? These people must be making some bank, right? Wrong. Green bar is the pips won, red bar, pips lost. You go across all those trades, and what do you find? Despite that huge percentage of win ratios, all the accounts are losing money. Millions of accounts losing money. See, the bottom line on all of this is profit ratio. It's not percentage winners. Losing traders focus on percentage of winning trades. Winning traders focus on profit ratio. You have to take more money out from your winners than you lose on your losers. Right? And in the data I just showed you, what do you see? Those losing traders have what? They have it the other way around. They're losing twice as much money on their losing trades than they win back on their winning trades. So even though they're winning at a high percent level, these traders can't pay their losses. So the bottom line is you have to take more money out of the market from your winners than you lose on your losers. And in the course, we teach you how to do that. You know why? What the real issue is again from William Eckhart. One common adage that is completely wrong-headed is you can't go broke taking profits. Well, that's precisely how many traders do go broke. While amateurs go broke by taking large losses, professionals go broke by taking small profits. Think that through. How many times have you said this to yourself? Ooh, I got a nice win on this one. You know what? I've had losses this week. I better just bank something here to make sure that my books look a little better. And by the end of your career, what have you got? More losing trades, more winning trades than losing trades, but more money lost than made because you never took more money out on your winners. See, what's the first rule? What's the first thing that winning traders do different? Is they hold their winners. You need to have a method for this simple thing. Hold your winning trades. Otherwise, you can't pay for your losers. Holding winners is the cornerstone to successful trading. It should be obvious from the data that I just showed you that the entire universe of traders doesn't have that skill, even though they think they do. And they'll be happy to tell me they've got it when I look at their account balance, which is losing. So why do we still have this problem? Why do we still have this problem? After making and losing millions of dollars, I want to tell you this. It never was my thinking that made me the big money. It was my sitting. Got that? My sitting tight. Jesse Livermore. Livermore made $100 million in one day, back when $100 million was a lot of money. How do you do that? Sitting tight. He was short heading into the crash on Black Friday in 1929. He was selling every time he had an opportunity. He was putting short positions out because the whole world was long, and he knew there was nobody left to buy. It's not that the economies were going gangbusters, so it's all bullet. No, he knew that would change at some point. And the change was going to happen when it happened. So he was ready for it. See, we teach methods for holding winners that are considered unconventional, but they work. One of which is turn off the screen and go for a walk. I've had clients that I work with in my Psychology of Trading course who get into these tizzies over holding a trade for a day. And I tell them, look, if you're having a problem with this, you get the position on. Is it working? Yeah. You're stopping for a loss. Yeah. Sitting there all day long watching it isn't going to change what the market does. So turn the screen off, walk down the block, go get a cup of coffee, and come back. I had one client who put his position on, put his risk stop in, got a phone call from an irate customer, spent 2 hours on the phone trying to fix the problem with his customer. It upset him so much that he went out for a stroll to try to clear his head and get a sandwich. And he gets a sandwich, and he comes back to his office, and he realizes he's been gone 4 hours, and he jumps at the screen. Oh my God. What could have happened? Fully expecting that he had been stopped out at a loss, and he could have rolled a stop to break even sooner if he would have been there, and blah, blah, blah. Then he came back, and the market was more than 100 points his way. More money than he ever made on a trade before in his life. He made in 4 hours. He didn't know what to do. So I told him, what does the protocol say? You roll stop to break even, and you sit on it. So a few weeks later, it was the single biggest win he'd ever had in his life trading, ever, and any other investment he made. And he couldn't stand it anymore, so he just took the trade off so he could see the money for real. It's really there. Hold your winners. Otherwise, you can't win. Professional traders use longer time frames. The most successful net winning traders are not concerned with the same things that concern losers, such as making money right now. Traders, he's not interested in making right now money. You don't need to make money right now. They're not interested in getting in and out for a fast profit. Using high time frames is significant for winning traders because it removes the tendency to think that random noise in the market is statistically significant to price action. It's not. When you know what to look for, there's only two prices in the market. The price that the winner loses at and the market doesn't come back to, which pays me and you, or the place in the market where the short loses and the market rallies and doesn't come back from. What it does in between there doesn't matter. So buying and selling random noise on a 5-minute time frame, thinking you know what you're doing, when a daily, weekly trader or someone on a higher time frame views the entire day's trading as being the beginning of a move, trying to be in and out all day long inside random noise, when you could just simply put the position on and go take your wife to Europe for a week. That's where the money is. So we teach you how to use higher time frames to your advantage so you don't waste time. Winners know that they have to wait out the losing trade. It takes time for the loser to discover he's going to lose, all of them, and then pay you, right? This is how you put time on your side. Instead of it being, I got till the end of the month to break even, to make up my losses, it's, I have the rest of my life to make $1 million in 20 minutes. We add to winning trades. This is the gain multiplier. Really important. See, let's suppose you're on a big trend, which can happen anytime. You want to hold your winner, right? But how do you know when that trend begins and how long it's going to go? Suppose you bought the low that 6 months from now ended up being the yearly low. You're still long at 6 months from now? Probably not. But I'm going to show you how to do that. And then you want to do the important thing, which is add to winners. Because nothing will help you reach top-level performance for your account faster than the commitment to add when holding winning positions. So if you bought that low and it's starting to work and you're a week into it, you get another opportunity to buy. We're going to take that. That turns out a month or two from now, those were some of the best two places to buy, and we get a third or a fourth or a fifth place. What if we end up 6 months from now holding 8 or 9 or 10 open trade winners, all with a permanent profit locked in? And you're earning gains that are hundreds of percent, right? Isn't that what you got into this business for? There's another quote from Livermore. When I'm bearish and I sell a stock, each sale must be at a lower level than the previous sale. When I'm buying, the reverse is true. I must buy on a rising scale. I don't buy stock on a scale down. I buy on a scale up, right? Think about that. Now, I offer you a really simple method for you to hold and add winners. And adding can improve your profit ratio exponentially. What if you did 100 trades, only 4 of them were the bottom in 4 markets this year, and you added to all of them? So you made 10 or 12 out of 100 trades were profitable, but you tripled your account balance. You understand? It's not about whether or not you've got 60, 70, 80% winning trades. That leads to losses because it takes your focus away from the real issue, which is holding your winner and adding to it. Record keeping. This is the destroyer, the doubt destroyer. And I know this goes without saying, but you need to keep good records. In the members area, I provide you a trade tracking tool that assists you in collecting the proper kind of data you need to get better insights into what your trading is really doing. See, most people don't collect the right data. Trading is a business. You got to collect data. You got to treat it like a business. Keep good records of what you're doing. And most traders are not keeping the sort of records that can be used to improve their results. They're keeping the wrong kind of information. They keep the kind of records that make them feel good about what they're doing, such as, boy, I'm not taking a lot of risk because my average trade is only 4 minutes long. I'm getting in and out. So I'm not at risk. That feels great because that's not painful. But that has nothing to do with how the money's made. See, why do most losing traders have a hard time holding winners or adding to them? What's the real reason? Because they doubt their ability to win or protect themselves. So to create that kind of confidence, you have to have absolutely no doubt that you can win. And how do you get that confidence? It's from keeping accurate records that tells you what you need to know. You need records here's what you need. You need the records that you keep to give you clues. And those clues are supposed to help you do 2 things. Number 1, hold your winners. Whatever your records you're keeping needs to give you clues to how do I hold winners longer, and improving your profit ratio, right? Those are the records you want to keep. So let me summarize here for you, okay? Winning at trading is a very simple proposition. All you really need to do is follow in the footsteps of the forgotten and timeless wisdom. Livermore, Homa, the Turtles, Richard Dennis. I mean, I could name a whole lot bigger pantheon of traders that are considered the mouthpieces for this business. And they'll all say the same thing. They all do it differently, but it's all the same thing. Focus on your profit ratio, not your win percentage. Hold your winners. Add to your winners. Properly document what you're doing to get the data to hold your winners and add to your winners, improving your profit ratio. Everything else doesn't matter. What Stochastic says doesn't matter. What the news is, what legislation is signed by Congress, or what, none of that matters. The program that I offer at netwinningtrader.com provides you with tools to create a winning method, as well as to provide you with much, much more in trader development, which is almost the amount of data that I can share with you over a 1 year period of time. It would make you would have a PhD in this business. If there was a PhD in markets and trading, I'd have 5 or 6 of them. I know this is a silly question, but can you bake a cake? My mother told me that if I could read, I could cook. That's really all that there is to cooking, really. I mean, everybody talks about all the nuances and fun stuff you got to do, but there's a reason why you're supposed to use a 1/4 teaspoon of salt and not a full teaspoon. Anyway, if you want to bake a cake, just simply read the recipe and do what the recipe says to do. Trading to win, it's like baking a cake, really. There is a recipe you have to follow. If you follow that recipe, you end up with a cake. If you don't follow the recipe, you get something else, right? To win at trading, simply follow the recipe all winning traders follow. There's no mystery to it. So in conclusion, now you know what you need to know to become a net winning trader. And thank you for attending. And the floor is open for Q&A. We're going to have a recording for you later. While we're covering your questions, I want to remind everyone that you have until midnight, February 28th. That's next Tuesday, to take advantage of the special discount I'm offering on providing to the initial course participants. Tony and I have created this course in the last 7 months, and we want to make sure it's exactly what you need. So I'm expecting that if you take advantage of the discount, you're going to provide me feedback, and you're going to tell me what you need to see or what would help, and we're going to create that. So there's a little bit of a savings on the way in because you guys are maybe going to need a little extra help or a little extra something, and we want your feedback. So I'm willing to help you with that, right? But that ends next Tuesday. Here's the code: the Lion Online. No caps, no spaces. Just when you're paying for the course, just type that in where it says discount code. Put it in there. You're going to receive a full 50% discount off the cost of the course. So you pay one-time fee. It's everything that you need, plus 90 days of live workshop support. I just did a workshop here at 10 o'clock this morning before we got on the air with this thing. So if you're interested in understanding what those workshops are all about, here's what it's all about. It's about taking what you already know and fine-tuning it and fixing what you don't know. You need help to do that. You have to have some guided coaching, some guided mentoring. That's what the workshops are for. I provide that 3 times a week currently. Maybe I'll do it more if it's needed. But right now, the online workshop support is a huge, huge benefit. And here's where you got to go: netwinningtrader.com. And the floor is open for Q&A. Tony, you're there, I hope, aren't you? So we got questions. Tony likes to jump in, and like I said, he's my developmental partner on this. So we'll open the floor to Q&A right now. Guys, where do you want to start? What kind of questions do you have? Tony, why don't you go through some of those questions or notes or comments that were typed in while I was speaking, and maybe we can start there. So
Okay. All right. Yeah. So there wasn't too many questions today. People were generally just listening, it seems. And we got one right after the end here. Do you believe what we don't know is what causes repeat losses as the odds are stacked against the retail trader? By
well,
TY.
okay. Well, I think you're basically saying the same thing I'm saying. Is that you can't win in this business unless you do something different than the loser, and you don't know what that is. So if you know what it is, would you change that? You know what I mean? This is the thing that fascinates me about this business, is how many people, when confronted with the fact that they're losing every single week, week in and week out, month after month, they've blown out 3, 4, 5 accounts by now. They've been trading for 10 years, never made a dime. And I say to them, if I could show you what you're doing wrong, will you change that and stop doing what you're doing wrong and start doing the right thing if I show you what the difference is? And how many times they will come back with, well, I need to know this, and I'm not sure about that. And what about this? And what about this oscillator? And I've been learning this. And what about, maybe I should switch to this market? I mean, guys, if you want to lose, go right ahead. Do you know how I get paid when I trade my account? I know where you're at. I know where you trade. I know what you're doing. I can look at a price chart and go, there's where the loser is. You know, yes, I have my shortcomings. Yes, I have moments when I miss my clarity. I'm no different than anybody else. But 80 to 85% of the time, I know exactly what the hell I'm doing, even when I make mistakes. So who do you think is going to make more money? So if you want to keep losing, keep at it. Feel free. If you want to change that, you have to start right now with, yeah, you know what? I got to make this change. I can't, I don't want to end up. Now, you can be afraid of making the change. You can be confused about making the change. You can be angry, upset, any number of emotional responses to being in a position where you got to make a change. And dealing with things that maybe are more familiar to some of us, like dealing with somebody that's got a reoccurring problem, like maybe they've got an alcohol problem, or, maybe they stay in dysfunctional relationships or whatever. Most of those people will never make a change until they hit rock bottom. And where is that for a trader? How far do you have to go before you're really able to make that change? The difference for me, the thing that happened to me that might be different for some of you, the thing that happened to me was I was looking for that change. I was looking for it. I just couldn't find it. And then all of a sudden, it hit me square in the face. Wait a minute. Wait a minute. If 85% of people are losing, then all I got to do is find who those people are and take the other side of their trade. Is that what the wheat pit trader meant when he said, when everybody's selling, buy? I had to find out. So I wasn't fighting against making a change. I couldn't find it because I was so blind to what I needed. Once the blinders came off, I made the change that day. And by the time that change made itself permanent, that changed my life. Because I'll tell you what, you know, making or losing seven figures sounds drastic, but it really isn't. And I've done that enough times now to tell you that making the money isn't the hard part. The hard part is keeping it, because I make all the same mistakes you make. Make enough money to be able to say I finally made it, and I go out and buy things. That's what I used to do. I don't do it anymore. No, now what I do now is I get involved in investments that go bad. So it's frustrating. Just make a big chunk of money, put it into some real estate development, and have the real estate developer find out he's a cocaine addict. That happens. So there's the thing that's important to know is it's not about the willingness to make the change, because a lot of you, I think, are willing to make a change. You don't know what the change is you need to make. That's very similar to what I went through. But there are some of you that know they need to make a change, but they're not going to do that because they got to do it their way. And that is a recipe for disaster in this business. So if you want to win, you got to be willing to make the changes. If you're not willing to make the change yet, then you're going to lose.
All right. Can I add something here? Because
Sure.
I think that, all right, I've consumed, let's say I've bought a lot of material, I've learned from a lot of people. And what I as a consumer, whatever, look on the outside looking in before this we ever did anything together. One of the things that really stood out to me was just the reality of the situation. There's no hype, there's no BS here. This is just real honest talk. And what you're going to see here is like there's the what the market is, and then there's what you are and what you decide to do. And I know one thing you say is they hand themselves a loss.
Right.
And so what I, to people who are listening here, if you're used to having somebody tell you, like, let's say blow smoke, that's not what you're going to get with Jason. He's going to give you the reality, and all the coaching and all this stuff that comes around is about, hey, once you know what to do, will you do it? Are you the problem? And he really wants to tell you you're the problem, right? Like I've stopped him. I was like, don't say that, don't say that, because I know it's too confrontational for a lot of people. But the reality is, there's the market, but our money is not coming from the market. And he said it earlier, but I just want to emphasize and put asterisks around that. What you're
Okay.
really doing, this 80% of people are losing, is your opportunity. That's where your money comes from. You
Right.
have to take money from someone else who've put a position on, and and the weak spot here is when will they quit and pay you? Because your money comes from other losers. That's the only
Right.
way you get
Can
paid,
I just
which
can
you
I just
teach everywhere. Yep.
can I just
Yep.
jump in there on that note, Tony? Because a lot of people are not going to believe this when we tell them this. Some of the people listening have never heard the term zero sum transaction. Can I poll the audience? Has anybody here heard the term zero sum transaction, or somebody say no? Were you willing to step up and say, I don't know what that means, or I've never heard that? Is there anybody that can you see that in the chat there, Tony? If that's the case, they're saying they don't know what that means.
One said yes, one said no. I've heard that. But yeah,
Oh,
there's always, if certain people don't know what you mean. Yep.
okay, all right. A zero sum transaction means there's no money made or lost in the market. What it means is when I buy the market, that's because there's somebody else who's willing to sell it, and we square off against each other. So my buy order is offset by a sell order on the other side that's coming from another trader who's made the decision to get into the market. So you can see the inherent conflict here. Is that why would I look at the market and say it's time to buy, and somebody else looks at the market and says, you know what, it's time to sell? Because we both believe we're going to profit from that moment forward. So now I'm in the market long, he's in the market short, and the next round of orders comes in and drives the market higher in price because there's hundreds and hundreds of buy orders and only 5 or 10 or 15 sell orders. So there's not enough selling to offset the buying. So the buy orders push the market higher. So while this is happening, my profit is growing, whereas the guy on the other side is losing money. When he finally sells his position, offsets it, I should say, he's short, the market's rising, so he has to enter a buy order to get out. When he does that, his money is transferred from his account to my account. It doesn't go into the market and then out of the market somewhere. It's transferred from his account, no matter where he is in the world. When he liquidates, if I'm the guy on the other side of his trade, that market cost to him is transferred to my account. Do you understand? So that means in a zero sum trade, futures, options, cash forex are all zero sum transaction accounts. That means if I'm going to make $1 million, that means you and a whole bunch of other people have to lose $1 million. Your account goes from wherever it started to zero. My account has that money. That's how the money's made.
So DG, I can't read everything.
Okay.
Why do you think that's not true? It is 100% true.
Okay, there you go. There you go. See,
right.
Tony, how many times I tell you this would happen? We get on the air to try to tell people how this business works and how to win, and someone's going to argue with me.
No, it's okay. It's really, we want to walk through because this is
You
fundamental.
want to walk through.
I will walk through it. Okay. Fundamental
right.
to everything. If you're in the
All right.
futures market, what you have is a contract, and it's not a contract for difference, it's a contract. If you go long, someone else has to let you in, and you both have an opposing contract. If
Right.
you're talking about a stock, stocks aren't on a zero sum transaction. So I'm not sure what you're talking about. Forex is also technically a zero sum market. Some people do take contract for difference. So there's some factors there. You might be not taking from another trader, but your broker might be a bucket shop actually
Right,
functioning against you, saying, I know you're going to lose. I know out of the percentages, the probabilities that all my customers, 80%, 90% are going to lose their money based on the statistics you just saw. All I do is
Right.
take the other side, and I'm guaranteed to win. You're the house in a casino.
Yep.
The casino says the odds are in my favor, and that's what a brokerage shop can do in a forex market. Doesn't necessarily mean they do that, but that's one aspect they can do.
The brokerage shops around the world, that is not illegal to do that, because
All right.
what the brokerage shop is doing is providing liquidity
Okay.
Up the other way. You follow
All right.
me?
Yeah.
So
if you sell an option, you can hedge your options, and the net position to you as an individual, if you're, say, a market maker, like you say there, DG, you can be a floor trader. You can do all that. You can hedge your position. But the fact is, in this contract for the option, which we're not really talking about directly, but indirectly, it's true. If this trader gets paid money, The money doesn't come from the market. It comes from someone's account. Everybody has account on deposit. Their deposits are all net together. And somewhere through your brokerage, through the exchange, the winner is paid by the loser. Do you disagree?
This guy says he's been floor trading since 1980. He's been a specialist in options for 25 years,
And we're not here to argue. All right, just say it. We're not here to argue.
No.
I don't want to argue with people. We just want to be sure that people understand what we're talking about. When you talk about stocks, there's like people have IPOs, they have all this other stuff. What we're talking about here
ask this guy if he's ever had an out trade. Where'd the money come from?
But it doesn't matter, DJ. You can have multiple trades.
This guy's what's called in the business, Tony. I'm telling you this because I've been through this a million times. This guy's what's called a shill. This is
no.
This is somebody who comes in and wants to disrupt what we're doing because he doesn't
he's
me or the product.
Jason's a little more sparky than I am. I'm a little less sparky. Let me moderate. All right, Jason.
All right, you moderate.
Hold on. All right, DJ.
I'm not going to waste any more time on this.
Right.
There's people out there that have an interest in what we're doing.
We'll move on in a second, but one more thing. Let me just say this. Okay, DJ, you understand. Whenever you sell the option, that the person on the outside of your option that you've sold them, if they bought the option, they're going to get your money. That's all we're saying. The rest of what you do isn't about what we're talking about today. And yes, there are other factors you can do. You can do hedges. And then actually, I'll tell people this secret. Yeah, I'll tell you this secret. Jason, his double your opportunity, if you look at the course material, is actually doing what you do. It's saying, I don't need to pick a side. Double your opportunity is about not picking a side. It's being open to both sides at the same time. If you know what that means, you'll learn a bit more. But we're not going to talk about that today.
I call that that is for people who have made the decision that they're tired of losing and they want to win. That's what we're going to talk about, the price agnostic method and how to manage that. Yeah. We're not going to talk about that in here.
That's not for now.
I don't want to talk about that.
It's going to confuse everyone and it's going to blow everybody's mind.
Yeah, exactly. And they don't want it. And they don't. What they need right now.
That's all we're trying to say, DJ. Is like a lot of people don't even know that's happening. They think it's some market, like, there's businesses out there and all we're doing is being part of this big market business kind of amalgamation of activity and it's all win-win. But this is not win-win. It's a win-lose scenario. That's what we're trying to enforce here. Win-lose. All right. We're going to move on there. I hope everybody understands what we're doing. But we don't want anybody confused, and we're trying to not be debating and, whatever. We're just trying to help everyone understand, and a clarity of observation is when you take a position on in the futures, when you take a position on Forex, it's someone else's account. That's where your money comes from. You have to beat them. You can't say it's just generic money that you're just going to invest and you're going to get the dividends. There's no dividends here. This is a bet. This is like a poker game. You have a position. Somebody takes a bet against you. Now you're playing for the pot, right? I know Jason doesn't like poker game analogies, so I'm trying not to say that too far.
Okay,
but
I know.
Just believe me, I understand what that means. And if you understand what that means, you know what I mean. But if you don't, that's okay. Don't worry about it. But we'll move on to some other questions, okay?
Right.
All right.
No, actually, I want to make sure that we give fair time to people with serious questions.
It's serious. I take it as serious.
Market structure and why one leg of a spread is different on an iron condor. Who? Yes. You're never going to do an iron condor with a $10,000 account and win. It's not going to happen.
It's okay.
So let's talk about the reality required
We're trying to help people who are new and struggling.
Right. Exactly.
Figure out why they're struggling.
I want to hear those questions.
Yep. What we're trying to do to fix things, to help them get on the right track. Disillusionment. We're going to try and remove stuff that might be confusing them, causing them to waste their time and effort and energy in the wrong directions. Right. Hey, this is free training to help everybody on this call improve their trading. That's the number one goal.
Right.
If you want us to help you, we'll help you. If you want to argue with us, we're not really going to be able to help you because that's not the goal of this, right?
Right.
That's not the point. So we're going to stop doing that.
Right.
All right, let me look up. All right, another question.
I can close that guy out if you want.
No, there's no problem. It's not. There's no negativity. It's just about trying to. It's like somebody saying, like, "Hey, you've stated something incorrectly." He's like, "No, it's not technically incorrect. It's just we're focused on a different aspect than you're focused on."
This isn't college, okay? This is me taking your money if you're not smarter.
Just trying to help everybody. All right, we're trying to help everybody with a simple conceptual idea to get them from where they are now, disillusioned. Right. Like if they're thinking, it's about some math and it's just, there's magic snowflakes of money that just fall out of the sky. No, you're following, what you're trying to do is beat someone else. And what you're doing, and one of the things we talk about is you're not trying to outsmart them. You're trying to outtrade them. And trading and smarts are two different things.
Right.
All right. Anyway. All right. So will this help in trading ES? I don't know. I don't know ES. I don't know. What do you think, Jason? He's the
Well,
only market I trade. I would say
that's
you can do better in other markets, but
well, it's the E-minis. It's the S&P futures.
yeah,
It's indices.
yeah.
Okay. Okay. The
Here's
answer to
I think there's some asterisks around this, but go ahead.
that. Okay. Any futures market, any options market, and any foreign currency market, all of these markets are zero-sum markets where the profit paid to you comes from a losing trader on the other side. So absolutely anything that I can educate you on to slow the loss process and improve the profit process, that whole thing is going to apply to trading in indices. Absolutely. So it can improve what you're doing, but the big question is, what is it that you need to improve? What is it that you think is the problem? Why aren't you doing as well as you could do is the big question. That may not be the same thing that has something to do with the market. In other words, you might think that you need to master the ES market when in fact the problem is you need to master. And there's something about what you're doing that causes you to be in the wrong spot more often. And you don't know that about yourself yet. So that's why the process of participating involves growth and change, because it's possible that your mind is full of misconceptions about what it is that you need to do. You know what I mean? Say that again.
I want to piggyback. I just want to add to that. What
Okay.
what I think you have to be aware of though is this is where you start to lose because ES is relative to the stock market and what all these institutional buyers are going to do and what all the financial things. I think you're not able to be as much of an independent speculative trader in the ES as you could be in other commodities or forex.
Could I just stop you right there?
Okay?
All right. Jesse Livermore, who made hundreds and hundreds of millions of dollars every year for himself, made that kind of money in one day. That guy said on numerous occasions that the easiest way for him to play in the market is to index what he does. If he was alive today, he would be an index futures trader. It's not about the stock market. It's not stocks that are the issue. He had to create his own S&P 500 from all the stocks that he had available at the time, because that allowed him to average the cost ratio benefit in the market. The average loser was going to be participating in what area of this average net is what he did. So when you say the average has to be accounted for and all this other stuff, it doesn't. The average is the other stuff. So he would be a futures index trader today if he was alive, because it would eliminate 95% of his problem, which was trying to pick how to weigh each stock into the index. The whole Dow theory thing was brand new when he was trading. So nobody knew if it was going to work until after the crash. And even then, he didn't trust it because it was what? A chart. So it's different. It's a totally different point of view that the guy used. He wasn't about using an average because if it goes to this price, that means so-and-so is buying and somebody else is covering and blah, blah, blah. No, it was about, I got to find out where the greatest group of traders that are going to lose are positioned in the market at about what net price. That's what he was thinking. Remember what Homa said? He said, it's not the tool. Get the thinking behind the tool, not the tool itself. So I want to encourage whoever is trading indices to remember it's the same game. It's the same market. It doesn't matter if you're trading indices, gold, or round blue bricks. You know, you're going to be in the same business with the same issues. And 90% of it comes from inside of your thinking and inside of your head first. So if you don't adjust that, you can't take advantage of the nuances that a particular market might provide you.
Yep. And the only thing I was thinking of was the plunge protection team that are actually manipulating that to manage that at certain times. So just keep in mind, it doesn't function the same way as other markets, which is more, let's say, clean. That's all I would say. So beware of that. That's all. Plunge protection team. Look it up. All right. Next one. SD. I think that's ND. As you make improvements to the course, will those modules be made available to the round of course participants?
Absolutely, absolutely. I'm creating content every single day that I put out there in the workshops, and then I put out there for you guys. All Tony and I need to do is organize it and post it.
Yep. So a
So
person who
you
buys the
absolutely,
course
yeah,
will have
absolutely.
lifetime access to everything in the course, all the videos, all the uploads, all that stuff. So you're always going to have that. You can come back to it. And that's part of the value here. This is a lifelong skill. If you learn this, which are, as we saw, it goes back 200 years, the same skills, the same understandings, the same, let's say, perspective. If you can, let's say, apply and learn to develop the skill. The skill isn't knowledge. Skill is what you do. Knowledge is what you know. Skill is what you do. You practice it. Now you have a skill that you own. That skill you will own will keep paying you year after year after year. And our course will be here. And it's really all the same things. Maybe we'll find another way to explain it better. Maybe find another way to illustrate it better. But it's the
Or I'll
same
take
concepts.
a Xanax and not lose my cool over some
Yeah,
client.
and then
So
and then we'll put the muzzle on Jason and make sure you can digest what he says. But anyway, the point is, it's we're always here to help. It's gonna be there for you. It's always gonna be a resource. I mean, what we kind of talked about is like, hey, what if we decide to stop doing this? We said, okay, if the last person who gets in the course, we're gonna guarantee them at least 12 months access. So let's say we shut down the website, we'll give the last person to join at least 12 months of access to all the material, and maybe we send them a DVD of everything that's in the course or
well,
something like that,
if
right?
we
Like if
yeah,
we're
we
gonna
do that.
close it
Yeah.
down, right?
Yeah. If
That's
we're going to
that's
be
the
gone. Yeah, we're going to be
yeah.
gone. Everybody will get a copy of the entire content base.
Yeah, that bought it. So don't worry
Right.
about ever losing access. We're gonna make sure you have access no matter what happens to us if we close down the site and we decide we're gonna do something else. Jason, he's got a lot of free time. Somebody asked me this, and this is kind of like I talked to Jason about it. It's like, hey man, if you're a successful trader, why would you sell a course? I mean, here's the thing. When you see Jason's methods and you see what's really going on, he doesn't have a lot to do all day, right? It's like, oh, you did something, you made a decision, and you haven't talked about Bernard Baruch, but I want you to touch on that. But you made a decision. Now you just wait. What do you do with the rest of your day? If you're passionate about trading, if you're passionate about this stuff, you want to help people. Oh, you might write a few books. You've done that. You might do a couple coaching clients. You've done that. And now it's like, okay,
Can
I'll
I
make this
can I ask
course,
you a
right?
question about? Yeah, can I ask
Yeah.
you a question about that? Okay, a lot of people really. Okay, this is I've never understood that argument because if if I was a successful concert pianist and I spent 25 years learning how to play at the professional level where I could play anything you put in front of me as a pianist, and somebody said, "Will you teach me how to play?" What would you say? Why would you say that that's a bad thing? If a guy says, "Yeah, I was with the Chicago Symphony for 40 years as a violinist. Now I retired, so I can teach you to play the violin. Are you interested?" A guy who's a professional pilot who spent his life learning how to fly and knows about all the different things that can cause people to die. You know what? I'm going to teach flying. I'm going to teach guys how to do this right. Nobody ever argues with that. They don't ever see those kind of things as being a problem. But traders, they seem to think that if you teach trading, then there's something wrong with you. That if you want people to understand how to stop losing, that there's something wrong with you, right? I don't understand what you don't.
Here's one I thought of the other day when I heard about this. Bella Lugosi, he's a dude, but
He's a
what
real
is he? Who
yeah.
is he coached? All like I don't know how many gold medal female gymnastics. And you're like, well, why would he know how to do that? He never did himself. These are the kind of thinking process that people go through. It's like, okay, coaching and helping someone is one thing. Like, what do you know? How do you get the best performance out of someone? How do you help them do that?
When
Eh,
I was trying to be a Formula One racing driver, I don't know if I told you the story, but I wanted to learn, and I took every opportunity I could. And you know, I met at a lunch party. I met at the time, the guy's name, his name is John Alesi. At the time, he had just retired from racing. And I said, "Can I just take a few minutes with you?" And do you understand what I'm saying? Is that here's a guy that does what I want to do and was a world champion and won lots of races. Who is better qualified to tell me what I need to know? So I asked him the typical stupid question, how do you win a road race? How do you win? And he looked at me with that look that anybody who's a champion in anything will look at you like, you just don't get it. It's not about winning. It's not going fast. It's how well you go fast. What does that mean? If you're a winning attorney and somebody came up to you and said, "How do you win a lawsuit?" What would that attorney say? Well, what about all the stuff that leads up to what kind of lawsuit are we talking about? Why is that important? What's the defendant like? What's the jury like? If you're a doctor and somebody comes up to you, how do you make a sick person well? No, that's asking the question of another trader. How do you win in the markets? It's that kind of question. It's the wrong question. It's too wide. You have to ask other questions. That's why I said in all the books that I wrote, the only reason I achieved the level of success that I have and I can share with others is because I learned to ask the right questions. The right questions are, what's wrong with me? What am I not doing that could win? What am I doing to hurt myself? What is it that's wrong with my approach? What am I being lied to about? What am I being misconceptions in my head am I allowing to keep? I learned to ask those questions. It wasn't about what's better in the soybeans this week. You know what I'm saying? People need to understand it. They have to grow to a certain level in their thinking before 90% of what I can share with them will probably make sense anyway. So I want to make sure that we're talking at that level all the time. You know what I mean? So that's the answer to the question that you just had. Why are people teaching? Why does this guy? He's never been a female, let alone he's never been a gymnast, or a woman, but he can teach little girls how to be gymnasts. Why is that? Because he's asked the right questions. He knows what he needs to know. That's a transferable skill. Learning to race cars is a transferable skill, but you got to know the right question to ask.
All right. We got to get some more questions, or we're going to never get everybody's questions.
I'm sorry.
All
I'm sorry. I don't
All
mean
right.
to be going over.
Okay. Is supply and demand mixed with volume really helpful spotting the losers in the market? That's MT.
Say that again. What was that?
Is supply and demand mixed with volume really helpful spotting the losers in the market? So it sounds like MT has a certain kind of perspective,
Okay.
and they're
When
using
we
supply and
say
demand. They have some kind of
supply and demand,
yep,
when we say supply and demand, are we talking about ask this person to clarify that? Are we
yep.
talking about a fundamental report prepared by some entity like a government or a independent company or some news service? Are we talking about a report of information? Is that what we're talking about?
Type in here.
Okay.
I mean, spotting it on the charts. So maybe a lot of people call support and resistance, supply demand, things like that. So I think that's what we're saying.
Well,
Supply,
I want to make sure I'm on the same page. That's what I'm asking.
that
So
would
when you say,
support resistance, supply demand.
well, if you're asking
Yeah.
support and resistance,
There
how
you
do
go.
you, okay, are we talking support and resistance in the market?
Yes. He's saying
Okay, how do you define that?
so is support and resistance. Let's just rephrase what he originally said. Is support and resistance mixed with volume helpful spotting the losers? I
Okay,
think the question is more about how do I spot the losers? I think, would you say that, MT?
how do I spot the losers using technical analysis? Okay,
Well,
the answer
okay.
to that question, the
Wait,
answer to the
wait,
question is,
Jason. Okay, he said yes. Here's the thing. Is
okay,
there zero charts in our process? No, there are charts.
no, there
But
are charts.
yeah, we use charts, but the charts aren't way everybody else uses them. So that's a key thing to say, hey, we're not saying you never turn on the chart. We're saying the charts, the way everybody else uses them, these pattern recognition, that's not really what we use them for. Do you want
Right.
to go from there?
Okay. Okay. All right. Okay. support and resistance in the marketplace is not the same thing as random noise. True support and true resistance in the market is where the order flow changes. So if you can't figure out where the order flow changes, you don't have an accurate understanding of where support and resistance is. So the first thing we have to do is redefine how you are calculating support and resistance. So let's suppose that you have that skill. You know where real support and resistance really is.
Real quick,
It's a,
let's make sure everybody knows what we mean when we say order flow. Does everyone know what order flow, what we're talking about?
okay, good. Okay. I don't know what that. I can't talk. I can't see all of this.
Hold on.
All right.
Turning, not quite, but anyone else know what order is there anyone who
I know. I
okay,
know.
let's just
I
say
know who.
just to go out and say
Okay.
what is order flow?
All right. Order flow is buy orders and sell orders are constantly coming into the market, the machine, right? And they come in, as they're entered by people who click the mouse. So since we don't know who's clicking the mouse, and we don't know how big the orders are, and we don't know how fast they're coming in, all we see is the price changes on the market profile. Or no, don't misunderstand me. I don't mean market profile like the analysis thing. I mean,
I think the key word here is order flow imbalance.
I'm getting to that.
Okay.
So the orders come in, they come in and they're offset, and all we see are the price changes on the market presenter, which is the chart. And that could be anything. That could be an open, high, low, close chart, a candlestick chart, point and figure, blah, blah, Renko chart. Doesn't matter. When you are looking at your chart and you're seeing the price go up and down and doing whatever it's doing, that's because the orders are being matched. Buy orders and sell orders. All day long, 24 hours a day. That's what's happening. When there's an order flow imbalance, that means there's a significant number of orders on one side or the other that overwhelm what's there on the competing side. So if there's a buy side order imbalance, you're going to get a lot more buy orders than sell orders present as the market is processing the order flow. So the orders are coming in, and it's always bigger buy orders than sell orders. That market's going to keep moving higher. At some point, that'll change. When that changes, that's resistance, not the price when the order flow changes. Because the market cannot continue moving higher if there's not an order flow imbalance on the buy side. In other words, if the buy orders all of a sudden drop to a level that the sell orders are now larger, then the market will stop in price and reverse. So resistance is not necessarily a price. It's when the order flow imbalance changes. That could happen. The market could keep rising in price after the order flow imbalance has changed because there's only 5 buyers and only 2 sellers. So there's still an imbalance, even though normally that market would process 10,000 orders in an hour. You see what I'm saying? So when the market order flow changes, the market still might move a little bit higher or lower. That's why you'll notice when I do my chart analysis, I don't include the tails because the real order flow change happens somewhere else. So you want to see that so you can say, this is support, that's resistance. Once you understand that, real support, real resistance, where the order flow changes, now volume can be an additional component of understanding potential, but it's not any different than any other technical analysis. It only has a method of probability to it. So if you don't know how to manage your probabilities, knowing all there is to know about volume usage and support resistance will not help you win because you don't know what your probabilities are. You can't sit on that trade. If you sold the high where the order flow changed and the market creeps up a little bit, it's going to scare you out. So all the knowledge in the world is not going to help you if you don't know how to manage and say, I made a decision. I did it at this point because of what I know changed. It's only a matter of time. My stop needs to be at this level to stay out of range, and I don't care what happens next. Until you've developed that skill, you can't win. So it's a great question. Where is
Yes.
support and resistance, and how does volume help? Great. I can show you all that stuff till your head turns inside out. And you know what? If you don't sit on your trades and hold your winners, you lose.
All right. Let me. There's a little follow up here, and this is important, and it's really, I think, a special way that you've, especially in the time compression book and all the stuff that from the beginning that you talked about. This Jo asked, following up on that, imbalance on every time frame. And the reality is every
Okay,
time frame is right now.
right. Okay. If there's an imbalance on every time frame, you're in a topping market or a bottoming market, and the opportunity to get rich is staggering. That doesn't happen very often. You know, when that last time I saw that happen was 10 years ago in the
Pay
gold
attention,
market.
folks. The opportunity to get rich is a big one. I really, really like this. If he's going to share that, I think you're in for
You know what? Oh God.
do it, Jason. Just do it. Everybody
All
put
right.
one in if you want to hear this.
All right. Anyway, the point is that if you can isolate and experience imbalance on every time frame, you're looking at a major turn in the market, and that doesn't happen that often. So it's more likely that an order flow imbalance on a higher time frame is going to overwhelm an order flow imbalance on a lower time frame. That's why trading on a 1 minute, 3 minute, 5 minute, 7 minute, that's all random noise. That has nothing to do with the structure of the market. If you trade on the reason why the winners are on the higher time frames is because order flow imbalance on those time frames will force the lower time frames to quit. That's called time compression. And that is not something we can go into at this freshman level stuff right now.
Okay. All right. But
I'm sorry, I'm not trying to be difficult, but
it's deep. It's a deep subject. But here's the thing, JJO, you're on the right track with thinking about things.
Yes, he's on the right track. Yes.
Yeah. And it is, we're not trying to overcomplicate this mini webinar here. And the reality is, on your day-to-day things, like if you remember my intro, I said on the macro, I understood it. It's because of this concept that you just talked about. And on the day-to-day, I didn't know how to use it because I didn't see these big, massive things happen. So that's the only difference. It's very the same thing, same process all the time. As Jason would say, all the time it's the same thing. Don't look for anything new. Nothing special is happening.
There's
And
nothing
so,
new. There's nothing different.
yep,
Nothing.
it's
It's
all
all the
what
same
you
stuff
say.
all the time.
Somebody on every time frame is looking to make a decision right now based on what it's doing to their account balance. And this is something I thought of earlier today. I was like, you know what? The only math that matters is the math to the loser's account balance. How much money am I losing?
Okay, can I just
Go ahead.
can I just offer an insight there that nobody's going to get until they really think it through. But listen to me. Listen to me. The average account lasts 4 months. That means a guy starts with X amount of dollars. It's all gone in 4 months. Now, if you have the exact same size account that guy has, and you trade against that one guy for 4 months, what's going to happen to your account? Think it through. If he loses 100% of his money, what's going to happen to your account? Did the phone go dead?
So
It doubles, right?
Right.
Somebody put in here doubles, right?
Yeah.
So if all you did was find the loser and forget everything else, how often can you double your account?
And guys who are on this, I'm going to catch up to your questions. We kind of jumped down, but
Okay.
I'm going to go back. Okay.
What
All
I'm
right.
saying is you could double your account every 4 months or less. So why don't people do that? If 100% of people are trading against 100% of the other people and 85% of those people are losing, how much money are the 15% that win making? So if you want to flip your switch from win or from lose to win, right? What do you really need to be concerned about? Where is the loser? How do I get on the other side and take all his money? And if I do that, I can double my account every 30 or every 90 to 120 days. So that's the mathematics behind what we're doing. So what was the last question? What was the last question?
Okay. I'm just
What was the last question? The last question was
last. Okay.
yeah, the one that you just what was the one you just shared with me? The last one.
The Are you saying the imbalance?
Right.
Or okay.
Yeah. The imbalance on every time frame.
Yep.
Right? Why do you need an imbalance on every time frame? All you need is the imbalance on one time frame. The one you're using that you know where the loser is. The loser's time frame is the one you want to get on. What is he doing? He's trading on the 1 minute, 3 minute, 5 minute, 7 minute, 10 minute, getting his ass kicked every day, day in and day out. For that until that one day he does make 20 pips that he thinks is exciting because now he's finally figured it out.
Or he makes 20 pips 5 times and loses 200 pips on one
In
of those
2
times.
days. Yeah,
Right.
right. Exactly. Right. I know. I've been there a million times. I know exactly what the guy's doing. So getting on the other side of that stuff is all you have to do.
All right. I'm going to move on. Okay.
Okay.
So EJ says, you said when people are selling, we should look for a buying opportunity. So you teach
Yeah.
going against the trend. What does that mean? How do you want to explain that?
Okay. The easiest money to be made in the business, period, is exploiting range trade. That means you sell the top of the range and you buy the bottom of the range. Right?
I
What?
didn't authorize this comment.
You didn't authorize this comment.
Okay.
Okay. But it's true. Right? So think about it. It's the easiest money in the world. The market reaches some low print that's been traded 100 times in the last 2 weeks, and it rallies up to some high print that it sells off from, and it's done that every day for the past 2 weeks. You buy the bottom, sell the top, buy the bottom. Range trade. Range trade is free money. Easiest money to make. Problem is, most people don't know how to define range. So they get their ass kicked trying to pick a range. Second issue. After range, what is the most likely money to be made? Going with the trend. So how do you define trend? What's the best way to buy an uptrending market? In a sell-off. When is the best point to sell an uptrending market? In a rally. But most people don't know how to do that because they're looking at the 1 minute, 2 minute, 3 minute, 5 minute, 7 minute chart. So when the market makes a turn and it's ready to make a big correction to the upside, they think that's an uptrend when it's not. It's a downtrend that you're waiting till it ends to sell into. But they don't know that because they're not using every tool that they could use in the toolbox properly, but they think they are because they took the Online Trading Academy's course on how to exploit 5-minute moving average crossover systems. You understand what I'm saying? Is they believe all this crap in their head, so they can't understand to do the simplest things out there. Trade the range and let the range work. Go with the trend. Uptrend, downtrend, range. Those are the 3 edges we give you in the Net Winning Trading course. We give you those edges. You don't even develop them. We give those to you. Here's how you trade range. Here's how you trade trend. If you follow those edges, you have 3 solid high probability ways to make money every single day if you know what to look for. Right? So how can you be confused about going against the trend? It sounds like you're going against the trend. No. Your point of view on what creates trend is causing you to be confused about why the market moves while it's in trend and when it corrects because it has to. You don't understand that, so you think something about the market participation that you're not qualified to understand yet.
Can I add something to there?
Yes. Don't say I apologize for Jason this time.
Jason is totally going off the rails. No. What I was going to say, one thing you didn't say in this webinar, and I think was really, really powerful and an aha moment for me, was that the short time frame trader perpetuates the longer time frame trends.
That's
that's
correct.
just a
Right.
clue. If you heard what I just said, the shorter time frame trader perpetuates the longer time frame trend.
Right.
Learn from that just statement, take what you will, look for that. What is the short guy looking at versus the longer guy looking at? And you'll see when they don't align, there's someone feeding the longer term time frame. And that was like, wow, for me.
Right. And to segue on that, what I'm saying is that loser liquidation is what propagates trend. When the loser is liquidating consistently all the time for all the right reasons, trend remains in place. So you have to know where the loser is participating and what they're looking for so that you can maintain that trend for you know where to enter and exit a trend. Does that make sense?
Okay, I'm going to go to the next question. All right.
Okay. All right.
How can I keep my focus and not close trades when I get too emotional? I think that goes to the doubt destroyer.
I would say that buy a bullet, rent a gun. Oh, whoa!
Rewind, edit.
Sorry. All right. No, I'm sorry. Let me explain to you how you solve that problem. When you say you're too emotional, you need to define what that means. What do you mean by I'm too emotional? You need to define that. So let's define what it means to be too emotional. Every trader has emotions. I have emotions. Some of my emotions will take me off the rails if I'm not careful. I have to manage my emotions, not control, manage. Two different things. Yes.
Something Jason told me when I first called him. He's like, "What happens when you hire a thief to guard the jewels?" And I said, "I don't know." He's like, "Well, it just depends. If the guard never steals the jewels, who cares, right? It's you as a person have to manage your emotions as the same way. Like if you're a thief, whatever, it's probably a weird analogy, but it made sense to me at the time. Was that yeah, as long as you don't steal, as long as you don't close your trade, as long as you don't do what you feel like you need to do, that's managing your emotions, right? Your urges. And you
Right.
just go through it. And how do you get the confidence? Well, you know your numbers. How do you know your numbers? You make your documentations, you do your trades, and you know what the outcome is long term, and you don't
Right.
let
The doubt destroyer. Right. The doubt destroyer.
things
Right.
confuse you. So once you have that built, that asset for yourself that only you can build for yourself, you have that for your life. And you know what this can do for you. And that's what Jason has, and that's what he's sharing with you in this course. It's like, I know these things work. And he's not giving you the harder, complex ones. These are the simple things. Once you get these under your belt, you can take your own creativity, your own things you want to look into, and start learning how to develop your own edges off of these, let's say, core strategies that
There's
are
12.
things. Yep.
One of the things I think I saw one of the people we have in here today is a former psychology of trading customer. I think he said that I took the course. I've been improving that course year after year after year after year, so that I don't know when he took it and what he learned and what didn't learn. So I don't know exactly if this is going to be apropos for him or it might sound new. But one of the things that I teach in the psychology of trading course, the issue that we all need to get to is record keeping provides us with tools to manage our emotions. We don't know that at the time. And so we have to constantly reevaluate and consistently look at the data. So, in order to make this real, it doesn't matter which edge you use. It doesn't matter if somebody gave you the edge or if you make it on your own. You still have to do the same work to verify that you're willing to enforce it. Because what's one of the biggest problems people have is, and I'm sure everybody listening and know either has done this themselves or they know someone who's done it, is that they have bought a system, somehow well recommended, well thought out, double blind study and back tested, whatever, and it looks great on paper. And so they purchase it and go to work with it. And here's what happens. The very first trade it says to do. Oh, I don't think I want to be a buyer of euro right here. That doesn't look right. Are you sure this is what it's supposed to do? Just do what it says. Well, I don't know if that's right. I'm going to adjust the price on this. And then it says put a stop here. Ooh, that's too far away. If that gets stopped out, I'm going to lose, $1,000 on this trade. I'm only going to risk $500. You know what I'm saying? So what ends up happening over the course of 50 or 100 trades, their results are nowhere near what the systemized approach would have provided them, because they're not really following the system. They're mismanaging it. They're doing what they feel is right within the process. And everybody goes through this. The biggest problem, system managers and developers will tell you that the biggest problem is their customers don't follow it. They say they're going to follow it, but then they fudge on it. They take some trades, don't take other trades. When it says go long, they look at it and go, nah, that's a short. They put a short out, right? And then they don't run their stops the way they're supposed to. And they don't, you know what I'm saying? So what ends up happening is that the reason they can't follow that approach or that system is because they didn't create it, and they don't know how it works. They don't know the psychology behind it, and they don't have the confidence to hold. So no matter where the edge comes from, you have to do the same work, because if you don't do the same work, you won't create the same level of confidence to follow the program. You know what I mean? And that is something that most people don't make that connection easily. They think if I buy a system, it's somebody else who's the expert. All I got to do is let it run. But they don't realize that what they're going to do is they're going to second guess it most of the time. So even if you're given an edge, you still have to do the work required, because if you don't, you won't see that the edge is proven. You follow me? If you want to prove your own edge, that's fine, but that'll take longer. And we don't want to take longer if we don't have to. So that's why we provide these proven edges. But we still want people to do the work so they can see for themselves that the edges are proven.
Here. Drilling down. Let's see. I get the idea how stay more than 72 hours will make money, but do not know the exact high to close the position. What is 50 moving average price cross up and downtrend as something happen? I don't know. These are kind of like technical questions about time. Time is definitely an important factor. And one of the
Right. Yeah.
things you talk about, and I don't think we share it here, was the four components of market structure. And one
No,
of
we
those,
don't talk about that here.
right. So,
Can I just answer the first question about staying more than 72 hours? Is the first one? It says I get the idea how to stay in the trade more than 72 hours, but I don't know the exact high to close the position. So if he's long, what's the exact place to get out? Right? Can I just answer that? Oh no, I couldn't hear you. I thought you closed out, or you went on mute or something. Because we do. I don't know if our internet connection is still robust. But anyway, the thing on this is you don't close the position. This is something that Richard Dennis put into his turtle trading, and where our friend Mr. Eckhart alluded to, is that this whole concept of getting in and out for a short profit and using percentage wins, that's not how the money's made. The money's made by sitting tight. Livermore said the same thing. I never made any money thinking. I made money by sitting tight, by doing nothing. I sat on my positions. In other words, when a trade is working, there's nothing to do. So when you say, I get the idea that I wait 72 hours, if the trade's working, where do I liquidate? You don't liquidate. You continually roll a stop up underneath the market to take you out if something changes. So if nothing changes, there's nothing to do but wait. And then you look for places to add to that position, so that over the course of whatever happens, you're in position if this becomes some huge monster move. If it doesn't become a monster move, guess what? Your liquidating order takes you out at a profit of some amount, which is fine too. So you don't take profits. You let trades work forever. If you want to get like and have screw you money in this business. If you want that kind of money, then when you put a trade on Monday morning this week, at whatever time you put it on, let's say 11 o'clock, you're never expecting the market to see that price again ever. And for now, until Jesus Christ comes back, you're in that trade. If you take that attitude with every single initiation you do, eventually you're going to be on something that goes a long, long way. Just keep adding to it and rolling your stop underneath. Adding it, rolling your stop underneath. That's all you do. One of the first lessons I learned was from a guy named Paul Russos, who still is in Chicago. He's still a friend of mine. We worked together at a small brokerage firm for many years. And then I moved on because I thought I had a better opportunity, and he just kept plugging away. Paul Russos. And he's a big hitter now. And when I say big hitter, I mean he's a slugger. I wish I could have had the career Paul had as a broker, but he was willing to do things that I wasn't willing to do as a broker, such as sit tight and get paid $1,000 when I was trying to make 10 grand. You know what I'm saying? Anyway, Russos told me one of the absolute key things that has every single time I see it happen just convinces me more and more that if you want to get to the point where the money is not the issue anymore, it's about holding your winners. He said, if you want to win and win big, put the stop in, let it ride. That's how he said it. Let it ride. I said, what do you mean? He says, you long beans? Where are your long beans from? I said, 4.5 right now. It's at 475. He says, let it ride, because someday there's going to be a drought. The next year was the drought. I wasn't in it then. You see what I'm saying? Let it ride. That's where the money is. You have to hold your winners. It's not about where do I get out. It's how do I stay in? Everything about winning in this business is completely opposite conventional thinking. Conventional thinking is try to reduce your risk. No, take the risk, because the other guy can't afford to take the risk. So he's going to pay you. Pick something that people say is conventional wisdom about this business, and I'll show you that the exact opposite is what the real truth is. That's why so few people win. Don't worry about where to get out. Keep finding a place to stay in and add to it.
I don't know. I never asked you this way, and I don't know what you're gonna say here, but if you think about what is a lotto ticket, right? A lotto ticket is you have a chance to win. If you're able to get into a position where there is a low probability, or say low risk, high probability opportunity, you basically have a position to benefit if things go your way,
Right.
and you have a control to get out if things don't.
Right.
And if you are smart about taking those positions, now it's just a matter of time, because it can happen at any time where you get into a position that ends up in a trend that goes a long way, and you can find opportunities to add to it. So if you think about it from that perspective, our
Yep.
main goal is to find ways to get into the market on the right probabilities at the lowest risk possible and see what happens. In a sense, that's what you can think about it as.
Right. There's a lot of truth to that. But see, the thing is that if you follow a probability, it's going to give you little wins, little losses, little wins, little losses, little wins, little losses. And at the end of a period of time, say 100 executions, 100 trades over 90 days or 6 months or whatever, there's going to be a handful, 2 or 3 that went big. And you were not expecting that. That's where the wealth comes from. The wealth comes from being in the game for the right reasons. Let it work. You don't know which trade that's going to be, so you have to take every trade. You see what I'm saying? Whereas conventional thinking is you only take the trades that you know are going to work, that are certain, so you get a high percentage of winners. Well, that's
by the end of the day.
and you
That
get out by the end of the day because you don't go broke taking a profit.
remove the opportunity for this happening for you. If you
Right.
know at the end of the day, no matter what happens, I'm getting out, you can't be in a long-term trend. It's by
Right.
definition you've
By
said.
definition, you can't. Right. And what when they talk about day trading, what makes the definition of a day trader a day trader? The fact that he trades only for today. So he's out at the end of every day, which is another thing I can teach clients if they're interested in learning, is how to monitor price action to know if day traders are liquidating. Because day traders have to liquidate by the end of the day. So when the market has day trader liquidation in it, it's got no support or it's got no resistance. So that's going to go a long way. But if the market has a huge amount of long time frame traders taking the other side of the day trader's position, you're going to get a lot of switchbacks that make it look like it's time to day trade. When in reality, you're going to get your ass handed to you every day for 4 or 5 days while the big trader is putting on hundreds of positions that he's going to hold for weeks or months. He's going to take all your money.
All
So
right.
how do you know if a day trader is liquidating or if he's getting eaten alive? See what I'm saying? Because if you know the difference, you can position yourself accordingly.
All right. Let me recap something here. For anybody who's not a member of the course, and I know some people here are members of our course already. What the course provides, it's going to have an analysis process. It's going to have these proven edges that have high probability, low risk design. They're designed for those things. It's going to have how do you manage your trades, how do you add to your winners, how do you decide when where to put your stops for your risk control. It's going to help you understand what you maybe should be risking, give you things to consider, and when you decide how much to risk in speculative trading. It's going to tell you how to document things so you can review and correct and identify your behaviors where you said, I'm going to do this. And then when that ends up happening is you didn't follow through. We're going to be able to help you recognize and follow through on those things. We're going to have, as you understand the given parameters and let's say protocols that Jason calls them, rules and things that help you get started, you're going to have questions like, well, what about this? What about that? Or I don't understand this. And that's where the workshops come in. So you get your questions answered. You can ask a private question. You can answer a public question that may help everyone if they can see your question, or we might answer you privately. We might answer you in a workshop. So you have your hands-on types of things that can help that and reinforce and make sure you're completely 100% understand how to apply the material in, let's say, the video portion of the course. Then there's nuances and things that come from these other workshop aspects. And then over time, you're going to see, hey, we've asked you to do certain things. You need to follow through on your documentation and make sure that you're able to prove to yourself that these are your probabilities. Once you have that, you have the confidence. And once you start making money and you get to the point where you can double your account, if that happens for you, now you're trading with house money. You have an additional level of confidence, right? That's not even your money at risk anymore. You already took away the money that you put in this market into
Mhm.
this account. Now, imagine what that can do for your confidence. So I know a lot of people say, I can't follow through, I get out too soon. All this is a matter of fear and confidence, right? And
Right.
that's good.
Mhm.
The good and the bad is if you can overcome your fear, if you can overcome your human nature, that's what everybody else is failing from. That's the cause of all the loser behaviors and loser mistakes that pay you. So once you have that perspective, now you can take advantage of that, and that's how you get paid. That's why this works, and that's why it always works, and that's why we brought up 1700s, 1900s, 2000s, 2100s. It's all going to be the same because people are putting their money at risk. People get in because they think they see an opportunity. They get out because of what happens to their account. If they start losing money, that creates all kinds of emotional, financial pressure on them to change what they're doing and quit. And if you can see beyond that and have the greater perspective, that's how you cash in. That's what the pros do. You go from being an amateur to professional. That is the difference. Holding your winners, overcoming your fears, managing your fears. It's all about the keys to your success. And once you do that, everything else happens for you. Once you get your profit ratio down, everything else is solved. And that's the solution to all your problems. Basically, If you don't have a winning profit ratio, then you haven't solved your problems. Once you have a winning
Right,
profit
right. Yeah.
ratio, you've already solved those problems. Now you just have to maintain and discipline that, and don't lose sight once you start making a lot of money, and or something you let in your life distract you, and you become disorganized, unfocused, whatever. Now in this process, what you'll find when you get inside this course is that we give you all these daily disciplines, what I do every day, how to create patterns and habits that are success patterns and habits. It's not about knowing what to do, it's about following through correctly, clarity of
Mhm.
observation, preventing your ego, preventing opinion. We're not trying to predict prices. We're trying to observe what are people doing that puts them in a weak spot that they're going to quit, giving you an opportunity to enter, I should say, at a low risk, high probability trade that could take you who knows where over weeks or months. So if that makes sense to you, if that's the kind of thing you want, if that's the kind of skill you want to build, we're here to help you. But you can take what we showed you today, and it will change your life. I mean, if you start maybe a year from now, you're doing something, you realize you're going to remember something we talk about today, and you're like, "Oh, here's what I realized." Maybe it's the next crypto hype bubble. That's how it was for me. That's when I knew I understood what Jason was saying made sense because, 10 years ago, when I saw oil, I knew oil was going up, right? And it's $100 oil. Nobody believed me. I said it's going up, and I knew when it was the top, and I was able to do that. So anyway, there's different opportunities you'll be able to have if you understand this thinking process that behind everything. That's everything. It's not the pattern, it's the people, it's the thinking process. If you can create the skill of thinking differently, looking for opportunities where losers are going to make mistakes, being able to enter those mistakes, looking for the big deals where it's the bottoms and all this. And you can read the books, you can read this other stuff, and you can learn all that. But if you just want a simple, and this is what I didn't have, like when I talked about 10 years ago, I understood the big picture. I couldn't do it as on a day-to-day basis. It was like once in a blue moon, there was an opportunity for me. But here with this course, if you I was just I was blown away by what he showed me, and that's what became the course. I'll just leave it at that. And now on a day-to-day basis, I know what to do. On a day-to-day basis, I know what to look for. On a day-to-day basis, I know what can happen for me and how to apply all this stuff that seems very conceptual into a very practical way. So I'll just leave it there. And I do know that Jason said that he's very committed to making sure that people get success. And do you want to tell them what you're willing to do for people who sign up today? Now, keep in mind,
Sure, sure,
this is
absolutely.
the intro, right? Like what we're hoping for is that people go through the course, give us the feedback, have the experiences, tell us what we need to fix, what we need to change, what makes easy to understand, easier to apply. What did you mean when you said this? Jason has a certain way of thinking, a certain way of expressing himself. I've tried to be the bridge between as a coming from where I was and where probably most of everyone is. I didn't understand what he meant in a lot of ways when he said things, and we were able to make those changes to make it easier to understand. So if you've read his books and you said I don't get it, now this course will get it. It's not the same as Psychology of Trading course from what he told me. It was
Hmm.
a very different process. So you could or could not benefit from this. But if you learned what you learned, and Jason can follow up on this
Hmm.
part. If you learned what he taught you in the psychology trading course and you still don't understand or you're still having problems managing behavior, you might need more coaching. That's what I would think is the
Right.
answer. It's not really how do I do this? What's the big picture solution? Because like I said, this is fundamental core principles. From here you can develop new edges. From here you know what it takes to make an edge, let's say valid. Is it really aligned with what psychology and people are doing? Or am I just inventing something that doesn't make any real sense if I'm basing on like a statistical thing,
Right.
right? Like you'll see the difference between those kinds of ideas. The ideas that make sense, like logically, these are what people are going to do. Here's the pressure people are under. Here's what they're going to react. If you're thinking along those lines, you're on the right track. If you're thinking, well, mathematically, I backtested this in 6 months, it said this percentage would be a winner, you're on the wrong track, probably.
Right.
You
Oh,
can still
totally.
validate it,
Yeah.
right?
Yeah.
But so
Totally on the
those are
right
the
track.
different thinking process. You're trying to take advantage of what people do, find new ways to observe what people are doing, find new ways that they put themselves at risk, find new ways to say, here's where they're going to quit. When they quit, it's going to create force on the market. That's what we teach. Now,
Right.
anybody listen to this so far, if you want to see the next level of this, the deeper level, there is a free video called Order Flow Analysis, the Foundation. That is part of the course as a preview. If that makes sense to you, if you say, I want to learn more about this, then the course is for you. If you say, I don't want anything to do with this, the course is not for you. That's okay. We're only here to help people want to learn, have an open mind. And if it's not a good fit, that's fine. We're not trying to persuade or convince you to do anything. We're here because we think there's a lot of people could benefit from this. We want to see their benefits. We want you to be part of this. We want to help you. If you want our help, we're here for you. If you want to do it your way, no problem. Then so why we're not up for debate, right? We're not really
Right.
here to convince anyone to do anything they don't want to do. It's only if this makes sense to you, if you think this could help you. Now, if there's something that you don't understand, like, hey, I'm not sure if it could help me. I'm doing this, I'm in this other place. And this kind of goes into something else that somebody asked about. Are there other success stories? What we'd encourage you to do on the homepage, netwinningtrader.com, there's a scheduled call with Jason. If you think you want our help, but you're not quite sure if this is the right fit, that's when we would like you. Hey, Jason's willing to talk to you, get to know you, find out what you're doing, find out what you want to do. You can schedule a book a time with him and he'll take your call, call him up, and he'll talk to you. And anybody who does sign up for this course, what we don't really talk about is that Jason wants to talk to you. He says, I want to get to know where you're at and what you're doing. And go ahead, Jason. Now, what are you going to do for people who sign up as far
Oh,
as making sure that
well,
you help them get to that next level of success, which we didn't plan on
yeah, yeah.
doing? Yep.
Well, yeah. The thing is, we talked about this before. I know, I really, really understand what people need to do. So if they will do the work, they're going to get better results. But we don't know how much time that's going to take. We've allowed 90 days in the process from getting started, attending the workshops, reviewing what you've got. In a 90-day period of time, I've never had a problem helping a person change from losing trader to winning trader. In other words, if a guy took my course, the whole thing, we've been able to fix that. Now, that doesn't mean they stay there, because there's any number of things that can affect that. But the initial skill becomes developed and is clear, and now it's a question of maintaining it. So I feel very confident that anybody who takes the course in 90 days is going to be getting positive results. They're going to be happy and they're going to be on their way. But we don't know if that's going to be the case. So I'm willing to work with anybody who takes the course today. If it takes more than 90 days, I'll work with you on that. Don't worry. I'll make sure that we have the time available for you. That's
And
as long as you're doing the
document it.
work. As long as you're doing the work, and you're not BSing yourself or BSing me. If you're doing the work and you're just not there yet, we're going to stay with it until you crack the code.
Yep. You
So,
just got to make sure you do the work and you document it. That's how we can
right,
help you. If you're not doing that, we can't help you.
right, because you got to document it. If you document it, then I'm telling you, the answer is right in front of you. If you document it, that's where it is. So if you do what I ask you to do and document it, we will fix whatever the problem is. I don't think it'll take more than 90 days, but if it does, I'll stay with you on it. And what we're trying to figure out is basically this. We're trying to figure out why you do what you do the way you do it. Once you understand that, trading becomes effortless and profitable consistently. You need to know why you do what you do the way you do it. The documentation gives you all the clues you need for that. Make sense? So I'll stay with you on it. If it ain't happening in the first 90 days, I'll stay with you on it. And I can do that now because, we're at the very beginning stages of something. We don't know if it'll scale or how it'll scale. So the number of clients that we will have in the first, couple of months, I know is going to be the number that I can work through and around to help those few people that, for whatever reason, can't seem to put it together quickly. But that's okay. Don't worry. It's not about doing it quickly. It's about doing it well. If you can do it right, then eventually you'll get where you need to go. If that takes you a few more months or weeks longer than somebody else, that's just your path.
Hey, I think there's a clarification here. J.O., this person asks, if you document a longer term trend following program, it would in most cases take longer than 90 days to record results, etc. Question mark. So I guess he's saying if it's longer term trend, okay, this isn't just longer term trend following. Okay,
Okay.
that's just one thing to clarify.
Well,
Yeah.
the first thing I need to clarify about that is we don't know what the longer term trend is until it happens. Up to that point, think of it this way. Do you know who the number one slugger in baseball was, like, for decades? Was Babe Ruth, right? You know how he had like 750 home runs or something. He was a guy, the most successful ever baseball player, home run hitter, slugger, right? Do you know who also held the world record for number of strikeouts as a trader, or not trader, I'm sorry, as a baseball player? Babe Ruth. He will have the highest number of strikeouts ever in the history of the game up to that point, and the highest number he's most remembered for what? Highest number of home runs, right? What does that mean? Well, he must have gotten up to bat more than anybody else. That's the bottom line. So he got up to bat more than anybody else. So the issue isn't how many home runs did he hit. The issue is how many times did he get up to bat. So he got up to bat all the time. So you as a trader, you got to get up to bat. You don't know which trade's going to work. So the issue is getting up to bat, putting the trade on, managing it. You got to do this like clockwork. You got to learn how to do that. If you then do it for the rest of your life and you get on some massive trade that is 6 years long, you would never have done that unless you got up to bat every day, did it the same way all the time, managing your probabilities and letting it happen. So it's not about managing. If we get on a trend in the first 90 days, if you don't do that, you don't know the skill. No. The skill, you learn the skill, and the skill provides you the opportunity. We don't know when the opportunity is going to show up. They can show up anytime.
Yeah. And one other thing, like in terms of, I asked this question to Jason. He said, you'd get 100 trades in 90 days for most times.
Absolutely.
Right.
Absolutely.
So that's what, just to give you a scale here, you'll have 100 trades probably in 90 days. Only one or two maybe turn into monthly, multi-month holds. But here's the thing. A lot of people don't know what to do if they have a big, fast gain, or if they start getting on the right side of a big trend. They freak out. So we want to say, okay, open your mind to the possibility that this trend doesn't have to end this week or today or this month, right?
Right.
What do you do? We give you that information, like how to manage every kind of trade, every kind of situation you could be in. So you're never left in that, oh crap, what do I do now? Right? You'll know what to do. It's very simple. All right. There's another thing I want to say. If anyone on here has a job, has a business, has something else they need to do every day, how much time do you really do? What do you do if you have a day job?
I would keep going to your day job.
Right. How do you make money trading if you have a day job?
Well, I always use this illustration because I think it speaks very highly to the concept. The concept is you need longer time frames because the real opportunity takes time to develop. It takes time to scare out the loser. It takes time to get, opportunity to flow. So really big money opportunities take weeks or months to happen, and you got to let them happen, and it takes time to find them. And so, if you are sitting in front of the screen all day long, that's not going to necessarily help. In fact, it'll probably work against you because you're going to rethink everything you know. If you have a day job and you say, look, I'm working every day at my career, but I got a couple hours every day or on the weekends I could put towards a trading program if I knew what I was doing. Great. So we'll teach you how to manage that hour or two a day or every other day or on the weekends that you have to basically enforce the exact same concept, but on a longer time frame. And a perfect example of that is Bernard Baruch, who is he's a contemporary of Jesse Livermore. They were around at about the same time. And he was a really, really good trader in his own right. He actually had a business career in New York and in politics. And he was appointed by Truman to be the first head of the U.S. Atomic Energy Commission, Bernard Baruch. Anyway, one of the things that he did was an investment program that he had to manage his wealth. and he would spend no more than 30 minutes a day in the morning making his trading decisions and studying what he needed to study and whatever it is he was going to do. And he'd be done. And at the end of the day, he'd make a call to his brokers and ask for his fills or results. Next morning, do the same thing. And then make his phone calls and enter his orders. So basically, in fact, a lot of times he would do this 30 minutes of study and change and whatever on his trading. He would do that in bed in the morning while having breakfast. His system and approach took advantage of the fact that it's not about the next 5 minutes. It's about the next big opportunity. I need to be there for that. So I can't be there if I'm worried about every 5 minutes backing and filling on some random price area that I think is important because I'm watching it. It wasn't about that for him. He would say, okay, I need to get positioned because we've got a bull market developing. What about this stock? He'd find out a little bit more. Okay, enter an order for 100 shares on that. And he'd be done. Next day, try something else. He was a very good trader and made lots of money in the markets. Never spent more than 30 minutes a day, and it never interfered with him being in politics or having a job or doing whatever else he wanted to do on the weekends. That's how he did it, because that's all you need to do. So I would encourage you to say, if you have a job, a day job, and you're trying to figure out, I'd love to learn how to trade, but I got this misconception in my head that I got to sit here and watch this all day long. No, you don't have to do that.
Let's see. Even in Livermore's book, this goes about scaling out. Even in so Jo asked, "Would you ever scale out then?" And I said, "Nah, you don't need to scale out. You can either,
No.
as long as you have no risk, why would you stop holding it? Either know when to add or know when to quit." That's how I put it. But he said, "Well, even in Jesse Livermore's book, he talked about if the profit was just too big to pass up, he would take it. Am I interpreting that correctly? Do you ever prepare for that?"
Well, let me ask you a question. How big is the profit that's too big? How big is a profit that's too big?
Yeah.
I mean, what's, you know what I mean? When we have achieved what we need to achieve in life, then our personal expression of what that looks like in the markets is our personal expression of that.
It's up to you.
Yeah.
Yeah.
I personally, the only time I close everything and don't care how much money's in the market, how much money I could make or whatnot, the only time that happens is when I've got some crisis I got to deal with. Like, for example, I live here in South Florida along the Sun Coast. And, what's our big problem down here is hurricanes. So every year there's going to be a hurricane. Oh, yeah, blah, blah, blah. Well, every now and then there's going to be a hurricane and it's going to come right over your house. Well, when that happens, you really are running a big risk. It's one thing for a Category 1 hurricane to kind of skirt the coast and go one way or the other, and the eye of the storm never gets to within 50 miles of you. That's just going to be a couple of rainy days and some wind. But Category 4 storm projected to reach land, and the eye of the storm is going to go right across the tree in my backyard. I could end up, my house isn't going to be here when I get back. That's what could happen. So the last thing I want to do while I'm packing up the car and getting ready to go to Georgia is worry about something I've got on in the markets. You see what I'm saying? There's things that take precedence in our world only because that's what takes precedence in our world. If you just found out that, your parents live in, what's that, Palestine, Ohio, where the train wreck was and spilled all those chemicals and killed people, and nobody wants to talk about it, and the government's covering it up like they always do. Wouldn't you be concerned that maybe something isn't right, and that's a priority. So you might close all your positions and say, you know what, like, I'm not going to deal with anything right now until I get this other stuff in my life figured out. No problem. That's okay. That is up to you. I personally believe that there are things more important than money, but I haven't found them yet. But I do believe they are more important than money. So when something happens that is more important than money, then maybe closing all your positions is more important. Only you can make those choices, though. I you know, that's up to you. But that doesn't mean you can't come back a week later, look at the market from the exact same perspective and go, oh, you know what? Where I got out at, that's going to be a great place to re-enter. So if the market gets to that point, here's my limit orders to put on the exact same position I had before I left.
Yep. No reason you can't re-enter it at another low price opportunity, right? Low risk opportunity.
All things
you're not one and done. It's always evolving, right?
Always evolving.
All right. And another thing to say here, I wanted to just bring up, okay, anyone on the fence, right? We do have this deadline and we do want more input from more people, and that's why we're giving the discount. I would just ask you, if you've gotten value out of this, my question to you would be, what do you think one nugget that helped you make one long-term trade would be worth to you, and is that worth a price to learn everything that we have to teach you, right? Like when we're trying to decide what do we charge somebody to learn this, right? Jason's putting his own personal time in. We spent a lot I don't even want to tell you how many hours going back and forth of how to express, how to record, we did a lot of work to make this really solid course. And if you want to preview what the course looks like, you can go to netwinningtrader.com/ let's see here. Member dashboard, I think it's called Net Winning. And you can get a preview of what's member area dashboard. I'm going to drop this link here, and you can see kind of what the components are of what's in the course. I'm going to drop it right now here. And you can go to that and you can see what it looks like behind the scenes, right? So there's the main page, and it addresses everything that we think we cover in terms of what you're going to get out of this, what we intended to provide you. So if you looked at the homepage there, netwinningtrader.com, it's how to hold trades for bigger profits that we talked about today, holding winners, adding to them, how to trade with complete confidence. We talked about today, destroying doubt. You looking at your trade records, proving to yourself what makes sense for you. That's how you become consistent. That's how you reduce the stress. Now, what's really happening on any price chart? Well, this goes into more of how do you look at the different time frames and what people are seeing and what people are doing, and that's goes to some of those support resistance areas and things like we have questions about that. All of that is included in how we approach and what we call Jason's analysis process. How do you trade every market, bull or bear? Well, that's the same thing. What is a bull market? What's a bear market? What do you look at? What are you calling that? How do you define that? What's your perspective? How to trade a job with how to trade with a job or a business, taking very little time. We covered that. You're looking at a higher time frame. You're making some decisions in the morning or at night, and that's it. It takes less than 30 minutes a day for some people. How to avoid making the big loser mistakes. Okay, everything we talked about today, we're about making the big loser mistakes, but in much, much more detail, much more certainty, much more definition. What is going on in the mind of losers? What are they doing? How are they showing their hand? Right? How I set stops to get the best chance to stay in trades. Well, that goes towards holding your winners. Your stops and where you put your stops and where you move your stops are all crucial in terms of this process. We didn't talk about that too much today, but most of your managing is managing stops, staying in, managing stops. How to create new edges. We talked about that today. Hey, we're going to give you these core concepts, and then those are basically how you can evolve in many different ways in your own unique ways, or just use ours. Now, somebody asked about success stories. Okay, on the homepage here, you will see 3 different stories about people from different places. Some people were successful. Some people never traded before in their life, and some people were trying but not successful yet. And how Jason, in a different mode, right? This course is new. In his coaching and other ways, he helped those people. So we can't, and also this goes towards, can you post your results? Okay, regulators require us to produce certain documentation before we can produce results, right? So also that's part of why we're saying, hey, we're going to give people discount. We want to see your results. And in this course from this particular material, we don't have a documented thing yet. So we're in the process of producing that. And once we have that, we can do that. So everything he's done before this helped a lot of people in different ways, but it's not exactly this. So we have to keep those different. All right. Just to make sure everybody understands. But anyway, there's people you can listen to, or stories about people you can listen to on the homepage. There's like 3 different little vignettes of stories about what people were doing, what Jason came in, and the change that happened afterwards. And so that will help you with that. And one of these people didn't have any new edges, used exactly their own. Other people had other things they're already doing, made them better. All right. How to trade without relying on any indicator, oscillator, or fundamental analysis at all. We don't rely on indicators. We don't rely on those things. Charts are involved, but they're helped as a tool, like Manisha Hama would say, helps you understand psychology. Looking at the chart, you see kind of a sum total of psychology if you know what to look for. And that goes with order flow analysis. Okay, so think about that. How you get positioned with better timing. That's on here. Yes, the better timing comes in is understanding when the shorter term trader is up against the longer term trader, and we know where that's gonna what's the most likely probability for what's gonna happen next. We don't predict. We anticipate, right? Know when to take gains out of an account. Okay, we talked about that a little bit. How I manage a big windfall profit. What if something happens your way very fast? A lot of people don't know what to do. I close it. I just quit. Okay, what are your other options? We can talk about those. You have other options and just, I'm going to take the money and run because you never know where that can go. And then how I limit risk for smaller losses. And there's a lot more to it. Then there's a bunch of, like I said, in the members area dashboard, there's a bunch of videos. You can look at what they're covering. You can't watch the videos till you're a course member, but it covers my trading approach, the foundation, what we talk about. You can watch a free video on that. How does the order flow factor and how's liquidation? What are we talking about with zero sum? All of that, if you don't know, will give you a tremendous. This is like one of the best videos I've ever seen in a short time frame. Explain everything there is to know about zero sum, order flow, liquidation pressure. It's everything you need to know in 30 minutes. Well, you can watch that for free. My high probability entry edges, my analysis process, then goes into trading with limited time and further considerations like, okay, you're in a business of making money trading. No matter what level you're on, you're going to need to know this information about how to make yourself better, how to catch your gaps. And if you're part of the workshops, Jason said he'll help you review that and your trading documentation to help you catch that.
Absolutely.
All right. So you get a bunch of resources. We have downloads. We have checklists. We can give you an Excel program macro that helps you take your data off of MT4 or other places that you can enter it to create like all this metrics and things that might scare you, but don't be scared. It's going to help you. You can use an Excel macro, but we're also have, like we mentioned, inside the resources for the members, a trading log where you can put your trades in, and we're going to start. It's a simpler, easier, more, let's say, intuitive way to create your data. And also, when you do choose to do that way, Jason can see it and he can help you, right? Because it's right there for him. So that's another benefit you get about being a member. And then we're having these weekly workshops. We're going to answer your questions. We're going to be able to give you more information, more nuances, show you, okay, here's what we're looking at right now in the current markets. Here's what I mean by this. Here's where you can do that. Get those questions answered, get your clarifications. And we firmly believe within 90 days, you'll understand everything you need to know about this process and be able to use it and apply it for your success. If you need more time, just come to us, ask, say, hey, I'm still not winning. I still am lost. Ask us. As long as you're doing the work and providing the documentation, we're willing to keep working for you. Now, if you are successful, but you still want to keep going, you can stay on the memberships, but we're going to put you in a different course. A different workshop. And there we can kind of broaden and add more to what Jason knows, like some of the things we hint at. But basically, the first 90 days, so 3 months, you want to learn how to use this material. We can't throw other stuff at you. They get distracted to confuse you, add more nuances to it, but there is more that we can add to help you find more opportunities, make it a little bit different. Once you know what to do, you can do that and it works for everything. But everybody wants more. How do I do it faster, easier, another opportunity? Well, there's more opportunities out there, more things you can learn. But we don't want to confuse people because if you can't learn the core, you're never going to work. These other things aren't going to help. You got to get the core. Sorry. Yeah, go ahead, Jason.
Can I just mention one thing about that? a lot of people don't really understand that trading is an art form. It's not a science, it's an art form. And people out there have to choose what their medium of expression in their art is going to be. You can be a painter, you can be a sculptor, you can be a musician. What else can you do in the arts that produces a benefit for yourself and for others? In the markets, the common denominator is the trading prices. That's what we make art out of. And we try to be buying and selling at the perfect time and the right time and trying to add to positions perfectly and all the rest. What ends up happening is that at the end of the day, your results are going to be slightly different than somebody else's results, but they're still valid results. Some people create the most ridiculous sculptures in the world and think it's art, and other people spend their entire life on one piece and it comes out to be something spectacular. Trading is an art form. Some people spend their whole lives learning a particular virtue. Michelangelo was quoted as saying that if people saw how hard I work at my craft every day, they would see no miracle to it. There's people that have looked at what Michelangelo does or did, and it's spectacular, incredible works of art. That how does a guy do that? First of all, how do you get a piece of marble that big into a building and then carve it? I mean, it's just, to me, mind-blowing. That's because I don't work 12 hours a day at sculpting. And when I was asked to do a painting, was so infuriated by that I signed it Michelangelo Sculptor. Don't waste my time. You know what I mean? It's just, artists are at a different level in a lot of ways. And you, as an artist in training to develop to become a trader, a really good one, it's an art form. So what's that going to be like for you? Does that mean you need to spend a lot of time every day? Does that mean you need to spend a little bit of time? Does that mean you just want to have certain sorts of impact and feedback and see at what you're doing? You're the one that decides how far you can go and how deep and how grand your art can be as time goes on. But in any case, if you're not making more money than you're losing, what is the freaking point? Seriously, what's the point? The money that we ask for what we want to share with you, you don't make the changes you need to make, you're going to lose it anyway. If you do make the changes you need to make, you're not going to, how are you going to find that? I would hazard a guess that nobody here has heard half the stuff that we've talked about ever before. Why do you think that is? You know what I mean? Think about that. I really want you to think about that. What is it that you're going to learn different? Well, it's right here, available anytime you want it, but you got to make the choice to get started. And if you don't, what's going to change? If nothing's going to change, you're going to lose the money anyway. It doesn't have to be that way, is what I'm saying.
I mean, how many years later when you finally, that's the thing. I think the time is the bigger factor. If you spend years trying on your own and you could have just had something that just got you there today. Like, it really, the stuff isn't that long. You could watch it in one day and get the big gist, and then over 90 days you perfect it.
Well, you could, like I said, you can learn chess in 20 minutes, but it's could take you years to master it. What if you could get lessons on how to play chess from someone like Boris Spassky or Bobby Fischer? You know what I'm saying? Is that people don't get that. You have an opportunity to get lessons on how to trade from someone who really does understand this business better than 99% of people you'll ever meet. Why would you say that isn't of value? I don't get that.
And one thing is, Jason, it's not. It's like one of those guys. I mean, if you're Michael Jordan and you can dunk a bat, not dunk it, just but if you're Michael Jordan, you have this innate ability to do whatever. It doesn't make you Phil Jackson. So you have both here. You have somebody who can do the best, play the basketball. He's also the coach. And when the coaching value of this is what I think anyone who's considering taking part in this is the real key. How do you get your best performance? That's your
Listen,
real goal.
the single
It's
most
the
valuable
coaching.
part, the single most valuable part of what we're offering is the workshops, without a doubt. That's the most valuable part. I do the workshops 3 days a week. You come for 90 days, 3 times a week. And on top of that, if you still ain't getting it, I'll work with you. That's the single most valuable part of this.
Like, we're not going to give up on you if you don't give up.
Right.
Right? That's the thing. We want people to succeed. That's the goal.
Right.
Of There's too many people spending too much money on the wrong things, wasting all their life, and it's just sad to see. We don't want that. We want to help people, but you got to. I mean, there's other people involved in this program, but the whole idea is we're here to help you. If you want that help, we're here, and we're not going to try to convince you. Also, I want to mention, if times are tight or you have different credit cards, we do want to mention there is a way to split it across multiple payment methods.
Oh, yeah. I forgot to mention that.
Talk about that, but yeah, just let us know. You can email us or whatever and say you need to split it, and we'll work out with you what you want to do. So don't be worried about things like that. So basically, let us know what you need, right? If you didn't hear something you want to know, if there's something you think you need, ask us about it. We don't know what your needs are exactly. This was designed for somebody who's struggling, who's maybe been trading for a long time, or somebody brand new, so get off the bat without having to unlearn things, right? So we're trying to help people who have learned things that may not be helping them unlearn them. And we're going to try to help people who have never learned the wrong things yet learn the right things so they don't have to go through a process of relearning, right?
Yeah,
And
that's a big thing.
yep. So you're on the right track. If you're new or you hear about this and you're new, don't worry. We might have talked about a lot of technical things, but when the actual course production, if you go through it, you don't have to worry about those kind of complications. You don't worry about all the complex and questions that people might have had here. If you're new, you don't need that. Like in the case study, I know we talk about somebody who didn't know anything. You helped them. She was like a retired housewife, and she just wants to start trading. She thought she could make money at it, and she just did what you told her, and she made the results. So that's in one of the case studies on the website if you go there. So just keep that in mind, right? There's nothing. Don't worry. You're actually ahead of the game if you're brand new and haven't been under any illusions. you're,
Yeah,
you're
that's
you're you're starting
actually
off ahead of the game.
that's actually a really good point. Is that you know somebody who doesn't know a lot about the business and is trying to get started is actually in a better place than someone who's traded for years and is losing. Because the guy that's new at this, never done anything before, has no bad habits. He doesn't have any issues he's got to correct. He just doesn't know. So if he applies what he's told to apply from here forward, he's not going to have to overcome all that emotional baggage that somebody who's been beat up for 4 or 5 or 6 years has got to go through. You know what I mean? Doesn't have those issues like fear of loss and liquidating too soon and all that. He doesn't have all those issues. So I think that's a benefit. That's a really good thing. I think we should make sure that people know that if you're brand new at this, you actually have an advantage. So it's okay to have that advantage.
Yep. And don't worry about this course. It's right for you. We design it from that level. So, and what we've asked people who have, who do have experience is like start with a blank slate. Start as if you don't know what you think you know, because
Right.
that'll get you where you need to get to be faster. If you can try and do that, it's only going to hold you back if you have to try and incorporate what we're teaching you with what you might have already had, and like some of the questions today, it just doesn't fit. It's not going to fit. And if you can just set that aside just for a little while, listen and we build you from zero to everything that goes into the thought process, the thinking process, like we did today, into what we were asking you to do. If you do it that way, it's gonna be easy for you to make the progress. That's what we feel. So, and one other thing, I know we're getting wow. Okay, if nothing else we've proven today, we've proven to you we love this subject.
Oh my God.
We'll talk all day if you let
I
us.
just looked at the clock.
Yeah,
Tony,
I know.
my God, I feel horrible. All these people have been with us the whole time too. Thank you.
Yeah. Anybody's still here. Thank you. All right. We're going to
That's my
close it
thing.
up.
I can talk about the markets for hours on many levels, and I sometimes do that, but I didn't stop to think that,
There's
these
nothing
people,
new coming
these
for anyone
people,
who waited this long. The bonus prize is
these,
already done.
yeah, these guys have got lives to lead and
Yep.
things to
We'll let you
do.
go.
Yeah. Okay. Well, listen, thanks for coming, everybody.
Go to
Appreciate
NetWinning
it.
Trader. If you have questions, you can email us. I put it in the chat, info@netwinningtrader.com. Email us there. I can see those things too. Somebody asked me, what's your email, Tony? I was like, just email us there. We both see it. And then, we hope that if, you'll stay with us in the long term, we're going to try and provide some more ways for you to benefit from being part of this group, with free trainings or things we're going to give out. So don't worry about that. And then we're also going to have a YouTube channel information there. We're trying to grow this as a way to reach the most people. If you share this with others, we appreciate it. If you know somebody or a group of people that could use information like this, if you hear them saying dumb things or making big mistakes or saying they blew out an account, I would ask you to reach out to that person on whatever level you have and say, hey, maybe you should check this out. That's all we're asking, because we want to help those kind of people. So that's my goal in doing this, and my primary goal. I mean, we gotta pay the books. There's costs that go into this, hosting, streaming, all the stuff that we're doing here. But at the end of the day, that's why we spend all this time with you, and we hope you join again. If you have your questions, send them in to us. We'd love to hear them. If you have hey, I didn't buy because of this reason, I would love to know what that is. If there's something that's holding
Mhm.
you back that we
Yeah,
didn't
that's a good
address,
point. Yeah.
just let us know. Right? Tell us what you're feeling about this. What did you take away from it? If you liked it, what the things you liked about it. If you didn't like it, what things you didn't like about it. I'm going to tell Jason not to say certain things next time, but that's okay. It's just how I feel. Like, hey, we gotta kind of keep on the positives.
Yeah.
I
I'm
want to help
sorry.
everybody. All right.
I do apologize for some. I get frustrated sometimes because I am hypersensitive to the issues, and it's like you can't. Somebody who Okay,
Wait, wait.
somebody.
Jason's about to say it again. Let's just stop here. He's about to
Okay.
re-say it. Let's just stop there, and
Okay.
we'll close it at
All right.
this.
All right. Deal.
All right. All
Deal.
right,
All right.
guys.
Listen. Thanks so much for coming, everybody. Tony, thanks for moderating and being moderate. Thanks you. And guys, we'll see you next time. Again, if you want to get started, just go to netwinningtrader.com. Love to have you. If you got more questions, please feel free to ask. And we'll see you in the next workshop. That's Tuesday at 3 p.m. For those of you that decide to get started, we're going to start right away tomorrow or Monday. Aside from that, we are, John wants to know, can Democrats take this course? Absolutely not. No, sorry. We're good to go. I'll go ahead and turn off the recording, and I'll just go ahead and close up shop. And guys, thanks again. We'll see you next time.